Let's go ahead and get started. If you would like the handout copy, I can send it to you, but I don't think it's necessary. I think the slides are just to help me stay on task more than anything. So let's go ahead and get started. Sue and Max and Tony will remember back in January. So I always start VC training ideas way before we've ever scheduled a VC training because I like to keep a list of things that we want to bring in. So I went ahead and put together a list of the top 10 bad habits we're seeing from former fiscal officers. And the reason I say former fiscal officers is we've got about 65, maybe even more, new fiscal officers since October. And if a day goes by where we don't get one or two newly appointed fiscal officers calling in, it's not a normal day anymore. So the turnover rate is enormous. And what we're finding is former fiscal officers were not doing things right for many years. And even though they're reconciled to the penny, things are not good. So let's go through these. This is a big one. Posting accounting payments and wages on the last day of the month when they're not presented, approved, or distributed until the next meeting. Understanding no idea of the significance of a payday and a pay period. They want the taxes to appear in the previous month. So they're handing employees paychecks dated 10 days ago. And then they're telling the employees they have to do it that way. And they don't. The software handles taxes and pay periods exactly as they should. Payday should be the post date. And the pay period is for state retirement only. So they just can't quite wrap their heads around the fact that a paycheck dated June 2nd with a May 1st through 31st pay period is May OPERS and June taxes. Can't wrap their head around it. So the software handles it beautifully, but they can't handle it. So number 2, posting withholding electronic payments but not making the online payments for days, weeks, or months. And associated errors with that. So when you're on the phone with a client that says, I made these withholding payments, and of course, what's posted in UAN does not reflect what they did online. So we get these calls all the time. I'm in my bank reconciliation, and they took out too much money or took out a different amount. No, you went online and you paid the wrong amount and you didn't pay attention. But their vouchers are all dated crazy that has no way associated with what's clearing the bank. So that creates problem. They're not printing the payment confirmation online. So I keep telling folks, print that when you're going online and you're making a payment, print the payment confirmation, staple it to the UAN voucher, and 3 months from now when you're trying to figure out something, you can tell that's not a problem. You paid exactly the voucher amount online. And yet, we're not going to get everybody to do that. They take no corrective action when the online payment and the UAN voucher aren't the same amount. Of course, the OPERS rounding difference, are we ever going to get people to stop posting that OPERS voucher before they make the online payment so they can see that there is a rounding difference and fix it? Or the Ohio Business Gateway, if you pay after midnight and that payment is late, they're going to add the fees, the penalty. They call it interest, but basically late fees to the tax payments. And they simply don't post them. What they're doing instead of posting them is just plugging in adjusting factors that show they're out of balance by the penalty. Just go in accounting and post the penalty, but you need to backdate it to the date it happened. So lots of problems researching these things. Bank reconciliation, so many things. They're just plugging in adjusting factors. So the ones that annoy me the most are receipts not in UAN or payments not in UAN. Okay, I would use that field as I was going through the reconciliation, but if I've got a bank fee for $30 and it's not posted in UAN, I'm going to save and close and go backdate the electronic payment where the fee hit the bank statement so I can clear it. But they're plugging in these things not in UAN, and it goes on for months. So if you've got a receipt not in UAN, for 3 months. Why 3 months and you haven't posted it? So posting a bank reconciliation with just this unidentified error plugged into a box that gives them the green check mark. That's getting prevalent. We're seeing a lot of, and when you ask them, do you reconcile? They say yes. That always is funny. And then you connect and look at the bank reconciliation, and it's not really reconciled. They're plugging it, and it's $60,000. And I know Tony had one last year, $110,000 of receipts and payments not in UAN. It's crazy what they're doing. So failure to properly maintain investment balances in UAN, and I did a section of this at the OTA because we're seeing so many new fiscal officers walking into systems that aren't set up right. And we're talking to these fiscal officers day after day after day, and we're trying to get these things set up. Secondary checking accounts are not maintained accurately. So sometimes the secondary checking account is sitting there and it does nothing. It never changes its balance. Other times, they're making receipts and payments directly from the secondary checking account, which requires extra processes in UAN that they're not following. Attempting to maintain a sweep balance. So those of you who are familiar with sweep accounts, it's an extension of the primary checking. Basically, the primary checking is given an X amount of dollars, let's say $40,000. So your bank says we're going to keep $40,000 in the primary checking, and then at the end of each day, if there's more than $40,000, we're going to take that extra amount and put it into this account that earns interest. And if there's less than $40,000, then the sweep account will give you up to, get you to $40,000. So it sweeps in and out. Every day there's an item that clears the bank. And you're not supposed to put that in as a second account and try to maintain its balance, because they're making a mess of that trying to do it. And that's not what audit wants. They want you to consider the sweep account an extension of the general or the primary checking and combine the two statement balances. But I've seen some real messes with that one. I've got one of these I'm going to call today. The money market investment is set up as a secondary checking instead of an investment. And you know, technically a money market account has the ability to write a limited number of checks, but I don't know anybody who is intending to write checks out of their money market. It's basically an investment. If it is a pooled investment, has no fund ownership, then the secondary checking, added as a secondary checking, doesn't hurt it. But if it is actually a non-pooled investment owned by one fund that is allowed to own an investment, then adding it as a secondary checking isn't going to work. You can't attach a secondary checking to a fund. Number 7. I think Sue, Mary Ellen, Max, and Tony, everybody agreed, not reading anything that we send at all. So not reading the information is a problem. It always has been. You're never going to get everybody to read instructions. But I think our best fiscal officers in the state, if you read a UAN user note and you say, okay, none of this applies to me, you at least know there's nothing coming down the track that applies to you. But every time the IRS changed the 941 in the last 2 years, we sent out a UAN user note that said, don't do your next quarter 941 until we let you know, because the forms changed. Hundreds of people did not read that, and they did the 941 anyway. And then when you go to install the next update, they had to delete the 941 out of the software. They didn't understand. So reading those user notes. Tells the new fiscal officer, well, that isn't the way UAN wants it to be done, but I do it this way on such a wide variety of subjects that shouldn't be done that way. Like dating the paychecks the last day of the month, even though they're not handing it out until the second week's meeting of the next month. So we've had a lot of new fiscal officers coming in. They've got payroll experience, and they're being told date those paychecks the last day of the month without any reasonable reason to do it. And when they call in, they say, I thought that was weird. So they're telling people this is the way UAN wants to do it. Well, it isn't about UAN. It's not the way you do it. Paychecks should be dated payday. Tells the new fiscal officer to call them instead of UAN when you need help in the software. Or call UAN and ask for Trina. Oh, please, don't do that. I really, I can't tell you how bad that makes me feel when somebody calls the support line and gets one of my hardworking teammates on the phone and they won't even tell them what they need. They only will talk to me. Well, that is so rude. Really rude. If we're working on something and they're calling back, I get that. You want to call back and talk to the person you've been working with, but to just tell the fiscal officer to only ask for Trina, I work with a wonderfully smart and dedicated team of people that if they get the call and they don't really know what to do with that, they'll get somebody else involved in that call. So I really hate to see that because I work with a wonderful team of people that they want the right answer to be given. And if they don't think they know the right answer, they'll ask for help. Um, Number 10, year-end messes. I mean, that comprises such an enormous list of things that are being done wrong at year-end. And the pandemic has only made that worse because the stress levels are higher. People are sick, their family members are sick. It's just gotten much worse than it used to be. I mean, every day of the week, we're getting calls from people that have never made these kinds of mistakes, and the year-end mistakes kind of bleed into the whole year. Don't I love it when someone tells the new fiscal officer, "Wait until year-end and we'll figure that out." That's a very, very bad thing to do. Figure it out. I'll tell you what, we are heading into the season of time where it's really boring on the support line because you could go an hour and a half without getting a call or an email. Now is the time we need people to call and say, "I've got this mess from January," because we can stay on the line now longer than usual. You call in December, you got 5 minutes because there's three people waiting on hold. So now is the time we need to be working on this stuff. And these new fiscal officers are being told, just we'll figure that out at year end. But when year end comes, they're not going to be there to help. They're tired, they don't want to do it anymore, and they're going to walk away. Refusing to use temporary mode. So they're telling their replacement, well, they'll talk about temporary mode, but I don't do that. I work 3 16-hour days and I get it all done. Okay, but don't make them do that. Temporary mode is going to give these newbies the time to get the year end closed well. So coming up to year end, they really need the help of having temporary mode set up so the new year starts off well. They don't use temporary appropriations, and they assume that that's an okay thing. Now, I've had fiscal officers tell me that they just tell their employees and their governing board they can't get wages, no payments can be made in the new year until I close the prior year. Well, that hasn't been true for many years. The software has had temporary mode for many, many years, and the only reason they can't do payments and wages in the new year is because they won't have the board adopt temporary appropriations and they won't um, get the new year set up. So it's more they don't want to do it than they can't do it, or the software won't do it for them. We really need these newbies to embrace temporary mode because year end is going to be stressful for them. Okay, there is my top 10 list of bad habits. So I'm going to go ahead and unmute the mics and see what you guys have to add to that, or if there's anything in that list you want to talk about. Those of you that have mics muted on your end would have to unmute your end.
Trina, this is Chris.
Yeah, yeah. Hi, Chris.
The one big thing I'm noticing in the last few weeks is people are running into negatives in their appropriation uh, funds
Yeah.
because of gasoline costs.
Oh,
Okay,
yeah, yeah.
so I've already sent out an email to the eight or so fiscal officers that are I'm helping with,
Yeah.
and so we're going to have to reevaluate all their budgets. And I told them if you're not doing it quarterly already, you need to start thinking about it.
Oh,
going quarterly right now.
oh yeah. Yeah,
And I'm getting a blank in the face look when I tell them that.
I agree 100%. So I always find it amazing when we get the calls from a fiscal officer that in October that says, I can't post wages. Why not? I don't know. What's the message say? Because there's three different things you could get. Of course, the insufficient unencumbered appropriations. You simply don't have enough appropriations, right? That's the easiest one. The second one is insufficient fund cash balance. The fund has no money. How could you not know that? So I think the one thing that people need to do is before you post payments, whether they're wages, withholding payments, or accounting, look at your appropriation status and your fund status and your purchase order list. And you're going to know ahead of time you can't post something because it's going to show you there's no money in the fire fund. How am I going to pay the firemen? I don't know the answer to that. I can't really solve that problem for you. How could you not know there was no money left in the fire fund? So the emphasis on looking at these reports, and then after you post things, look, because you ought to know, when I post this wage, do I have enough appropriation and do I have enough cash for 2 weeks from now? Because you now have 2 weeks to resolve that problem, right? Is there a meeting in that 2 weeks? So a lack of looking at cash, purchase orders, and appropriations. They're just not looking at what the software could easily show them to stay in front of problems. And yes, I always tell them you want to budget for gas price doubling. Well, even if you were budgeting for gas price doubling, it's even higher. And you want to budget electricity and natural gas for hot summers and cold winters, because it's difficult to come up with that last electric or gas bill in November and December if you've spent all your other appropriations already. So you need cushions in those accounts.
Yep.
Anybody else have anything to offer? Okay. Let's go on to the next. Backups. So, yes, backup. And I think it's really funny. I know some of you have run into this where you're looking at a desktop computer, one of the new desktops, and you haven't seen it before, and you're looking at that thing and you're saying, there's no DVD drive here. It's almost invisible to the eye. It is there. It's there. But you honestly, I've had people on the phone, there's like, it's not there, and you push on the front in the upper right corner and that drawer pops out and you're like, okay, I didn't see it. So it really is there. Now the next problem we're having with DVD drives on the desktops is people that have that up on its side. The DVD drive does not have a guard in front of it, and you have to actually snap the DVD into place. If you don't hear that click when you close the drawer, it falls inside into the computer. And then they've got a disc laying inside their computer. Some people call in, this has happened 3 or 4 times and they haven't done anything about it. So that DVD has to click into place. And of course, what's going to happen is people are going to start breaking the tray by pushing too hard. But I suppose one hand on the back and one hand on the DVD on the other side, clicking it into place, is going to keep that from falling inside. If it falls inside the computer, you just lay it on its all 4 feet and then open I think the top slides off. There should be buttons to release it, and you just get them out of there before they do any damage. We've still got people who are only backing up when the software makes them back up after 30 days. And the tech guys just hate to hear people crying. They just, these are tech guys. They don't want to hear people cry. They don't want to deal with that. So we just keep emphasizing, please back up. Please back at the end of your day, because you're going to be really, really sorry if you've done a month of work and your computer crashes. And now we're all old enough to be able to say they don't make computers like they used to. They are never going to make them that well. The customer service is never going to be as good as it was 30 years ago. They just make them to break these days. It doesn't make any difference what you're buying. It's just not like it used to be. So we need these folks to be backing up. If you do work, back up and take it home with you. And they've got to take them off site. We've had houses burned down, buildings flood. We had a fire department burned down, and the fiscal officer was standing outside the burning fire department, and he called UAN and he said, "What am I going to do? The computer's inside." And they said, "Where's your last backup?" In his pocket. He had the flash drive in his pocket. He had taken it home that night. So he had a backup off site. We sent him a new computer. We restored his data, and he's good to go. But he backed up last night. The ones that hadn't backed up for 30 days are going to have to do all that. And you have to back up your documents separate. You don't want your backup to be, let's say the server is in the building that just burnt down. Okay, well, if you're backing up to the server, it's not there anymore either. So the backups really have to be off-site. One of the things I wanted to show you, because people are still not used to this, and this was the process with the last computer changeover. When you go into the UAM backup form, it's going to remember the last drive that was assigned to your backup. So even if you're plugging a flash drive into the exact same spot, the next time you plug it in, it might not be labeled G. For example, this is exactly what I did yesterday, took screenshots of yesterday. When I opened up the backup form, it showed me G, and I had the flash drive plugged into the only slot that I use for my flash drives. It doesn't stay in there all the time. And this is what I got. Not enough space on drive G. And the reason is it's not drive G. When I plugged it into the identical slot this time, you have to click the browse button. Get them into the habit of clicking browse every single time, because that's only showing you what you backed up to last time. When I opened it up, it's actually green. E, my green. I labeled my flash drive by the color because I've got 6 of them in different colors. So it's actually the E drive. Same slot, backing up to the E drive this time. So you can't just look at it and click OK. And I've had people on the phone say, I did it. They didn't. They looked at it and clicked OK. You have to actually click on it to select it and then click OK. And then it brings back in and it updates it. This is now the drive you're going to back up to. So they should be in the habit of this, whether if it's a laptop computer, definitely every time they back up to the flash drive or a DVD, because the DVD is actually a USB device and it could do the same thing. One time you plug it in, it's labeled this. The next time you plug it in, it's labeled that. So get them used to using the browse button before clicking start.
I have a question about backup.
Sure.
What I was wondering is there any plans or any discussion about backing up, say, to a cloud somewhere, maybe some dedicated cloud? I wondered if UAN was considering that, or if an individual entity wants to back up to a cloud, does UAN have any advice about what would be a good place to do that?
Well, I think Diane Jamerson can give us a lesson on that. I think she was using a cloud device and she had been assured that it was backing up. And her computer crashed and it had not been backing up.
Oh, God.
So it was.
Yeah,
Go ahead, Diane.
yeah, it was the IT people we had said, nope, it's backing up. And sure enough, nothing was there, and I lost what was it?
It was months, like 3 months.
Like
if
2.5
I,
months of stuff.
yeah.
I was ready to throttle that IT company.
Yeah, I bet.
So
So and I do it on a USB drive now, and it comes home with me every night.
So
So
while there are options to back up to the cloud, what you want to do is back up on a device. And you can copy things to your cloud drive. So you could copy that file to your cloud drive, but the UAN backup is an encrypted file, and it has to be able to be recovered from where it's sitting, like on the flash drive, on a DVD. It's an actual file that's encrypted, and the file has to be able to be pulled off that device to restore your data. And I know we've talked to more than one client who were trying to get their IT person to understand that it's not a document. It's an encrypted file of data. So they have to pay for a higher grade of backup if you're putting files like that on your cloud drive. So they got the guy on the phone with our guys, and they kept telling him it has to be in its state. It has to come off the cloud in its original state, or it's corrupted. And so you hear a lot about cloud devices. You can just keep backing up to, I mean, some people are still using DVDs because they bought a big stack 10 years ago and they're still working. So DVDs work. If you're using a flash drive, or a lot of people have those large terabyte drives, never count on one. You got to rotate devices, because if you drop one of those things, it's dead and nothing's recovered off of it. They're kind of delicate. Even I've had over the years flash drives. I keep that Buckeye data set rolling like a live township, and I'm backing up all the time. And you'd be shocked the number of times I plug in a flash drive and my computer says it's corrupted and it won't work. These are sitting on my desk. I'm not taking them anywhere. Flash drives quit working sometimes. So then every backup I had on that flash drive is now not usable, but I rotate them. So I don't lose my Buckeye Township. So you gotta rotate those devices. I talked to one fiscal officer. She plugged in a flash drive and backed up to the same flash drive. She never unplugged it. Do you realize if the house burned down, her flash drive is in the computer that just burned up? And if somebody steals it, they're stealing the flash drive. You got nothing. So you do want to, and our tech guys say rotate 3, and it just makes me laugh, because how many of you would go home with one and forget to bring the oldest one back from home? Yeah, every one of us would do that. So I say, you can buy them in a package of 6 in multicolored. Rotate the 6. And at some point, you're probably going to have all 6 of them at home, and you're going to go, oh my gosh, what am I going to back up to now? So, and if you're using those terabyte drives, okay, 3 of them. Those are a little more expensive. 3 of them, rotate, because one thing to back up on, if it fails, you have no backup. So they can be copied to the cloud. And remember, we're working on the rewrite of the software, which will probably take about 5 years, and it will be a cloud-based software in the future. So it will be backed up on the cloud. It'll be on the Auditor of State servers. But
I have one other backup question. In an office where there are 2 computers, 2 fiscal officers, does the backup have to happen on the computer with the database?
No, either of those computers, because the other computer is connected to the database.
Okay.
So either computer can back up. When you're in a multi-user environment, each of those computers is somehow connecting to the database, or they can't get in UAN. So anyone in UAN, any one of those people, can do a backup. Of course, you would find it on their flash drive in their office rather than yours. So, but each computer can do a backup. Very good questions. Okay, RetroPay. This is a hot subject this year. We've had more RetroPay calls than I ever remember. I mean, it is for our union clients. They have police and fire unions to deal with. Contract negotiations usually include RetroPay back to. It's a pain, but it is pretty common for them. Another reason we see RetroPay is if audit just came in and the fiscal officer in a prior year got an amended certificate, a township. This would be specific to a township. So the fiscal officer got an amended certificate and didn't realize that bumped him up in the higher pay grade and didn't give them the raise. So, in the old days, audit, they never would say anything. If people didn't get paid enough, it wasn't really a problem. But when they were overpaid, it's a findings and recovery every single time. But I see now far more audits pointing out people were underpaid. And of course, if you go to the trustees and you say, we should have had a raise last August because of our, when we got this amended certificate, it bumped us up in the next pay scale. And a lot of times those are because of grants, and the account codes that pay the wages haven't got enough appropriations, and those funds really can't support a wage increase. But it actually has to be discussed in the minutes so that the board says, we understand we're entitled to a raise, but we will not accept it because the general fund, whatever funds pay it, simply don't have the money to pay the raise. That's dealt with. Audit's going to accept that. But if nobody even looked to see if they were bumped into the next pay grade, we'll be talking retro pay. And we also see retro pay when the fiscal officer forgot to give somebody a raise. So retro pay is a huge pain in the rear. If they're a state retirement member, wages are based on the months earned by the pay period end date, and retro pay has to be reported by the month it was earned. So you have to manually create reports by month as supplemental retro pay, and it's paid in UAN as one retro pay check, but you've got to calculate it by month first before you add the pay in UAN, and we're going to cover that more. I'll show you the reports, because when you're talking about a lot of pay over several months, when you calculate it by the OPERS month, you could end up with a rounding difference in the employee share. And the employee share rounding difference is a bigger problem than the employer share, because the employer share is a penny up, a penny down, but it's the employer responsibility every time. A rounding difference in the employee share over 6 months of supplemental retro pay reports has to come out of the employee's pocket. So you have to actually edit the share on the wage when you're paying it. Now, Social Security members, so this would be an elected official who's not an OPERS member, or a fireman, or somebody whose wages don't qualify for state retirement. No back reporting. It's all based on the retro paycheck. So Social Security members is a lot less work, but you can't just choose to do retro pay as Social Security. It's not allowed. If they're an OPERS or an OPF member, it's got to be done as monthly reports. Now, you can always call and say, I owe OPERS or OPNF, and say, this is what we owe retro pay back to, and let them tell you whether it's pensionable or non-pensionable. But so far I've never seen one that was not pensionable, but you'd want to ask. Of course, if you're doing a retro pay for last year and you have budgeted what you need for this year, you'd have to increase those appropriation accounts or you're going to run out. So lots of things to think about when you're doing retro pay. So let's take a look at it. I would always use the wages and overtime summary or detail because I love that grid that report provides, where it shows the paycheck and the pay period that was used on it. So our sample we're going to use is all three trustees should have had a pay increase January 1st, but the fiscal officer didn't update the pay rate until April dated paycheck. So the April dated paycheck is for the March pay period in my case. So I know the check in April for March 1st through 31st has the increased pay on it, but they should have had a raise for January and February. So I would look at the wages and overtime. This is the wages and overtime report, this grid that I love so much. It shows me, I would mark it for the year, and it shows me these paychecks. So this paycheck is not entitled to the raise. So anytime you're working on retro pay, you have to look at this report to see what pay period this is. So if the trustee was entitled to an increased pay as of January 1st, this January 6th paycheck doesn't count because it's for December. And this is common. There's nothing wrong with this. I know some of our townships will still have a special meeting in December and pay the December pay period at the end of December. So in January they get no paycheck, and then each month after that they're paid for last month, and in December at the first meeting they get November's check, and at the special meeting at the end of the year they get the December check. So that happens, but this is also very common. So this January 6th wage is not going to get retro pay. It's only the February check for January and the March check. I said that wrong. The February check for January and the March check for February. That's going to get retro pay. Okay, so the two trustees are OPERS members and the other one is a Social Security member. So I know they are short paid 2 months and I have to do 2 monthly reports. So for each of these trustees, I have to do a January supplemental retro pay report for 57.52, and I've calculated the employee 10% and the employer 14%, and I'm adding up all the months, and I can see that it's going to be a total retro pay, one retro paycheck for the pay period range January 1st through 2/28. And when I add that wage, I'm going to make sure that the employee share calculates to $11.50. If it calculates to $11.49, I'm going to edit the employee share so $11.50 comes out. So I have to know what the employee, and again, the employer share, rounding pennies on the payment can fix that. But you have to make sure that all of your months of retro pay, individual monthly reports, are going to add up to the 10% that the software will calculate as one wage. OPERS supplemental reports, I'll show you how you can create them individually in UAN, and OPERS does let you upload them, but you have to get permission first. And it's important to do the retro supplemental if you're going to do it through UAN, because it's paid in May, but it was earned in January and February. So if you don't do that correctly as a supplemental retro, you're going to get late penalties as if you forgot to report. So you don't want to get late penalties. So the retro report is going to prove that it just got paid. Now, I have been told that OPERS has a form that you can get from them where instead of doing the individual retro reports and submitting, you just fill out all the retro pay by pay period, and they'll accept that one report for all of them. So anytime you're helping with a big retro pay, make sure that you're grabbing that form from OPERS. Otherwise, you're going to be doing this. So I've added an OPERS G government and chosen January. And of course, the software is going to give me all of the January wages we've already reported. But I'm going to go over here in this report type area, choosing supplemental. And from the drop-down list, I could choose retroactive salary increase. And then the payout date is very important. I have to know when I'm doing this, the date of the posted retro pay. So, for example, I knew ahead of time it was going to be dated, our meeting date, on 5/26. So if you know you're going to date these the meeting date, because they're trustees, you would date those the meeting date, then you know ahead of time the payout date. But they need the payout date to make sure you're timely reporting retro pay. So we're reporting January. It's going to pull in with all the people in there just like they did normally. So one of the things you want to do, January retro. I forgot to click. Everybody's there. Now, most people don't even realize there's anything to the right of that. I always find that funny. So if you scroll over a little bit, you'll see the employer share here. And what you want to do, notice that everybody here is checkmarked like normal. Well, we only need the two trustees. So I would uncheck everybody else's name, and then I'm going to edit the salary employee contribution, and employer contribution. I just manually type over what was already reported for January. So this is my OPERS-G January supplemental. And I would save that and then add the February, do the same thing. Supplemental retro salary, payout date, and then change it to what is being paid. So once you get all those supplemental retro pay reports laid out, you want to add the individual employees. You should have a spreadsheet or at least written down what you've totaled it by OPERS reporting month, and the 10% for each month and the 14% for each month. Okay, and our third trustee, remember, was Social Security, so this is a piece of cake. He gets $57.52 twice. So I'm going to do a retro pay $115.04 just like the other two, and Social Security is taken out along with all the other taxes as of the date of the retro pay. So there's no back reporting to do at all with Social Security members. It's all based on the check date. So how do you calculate an hourly person's retro pay? This gets far more complicated because they have overtime, they have sick, blah, blah, blah. And what we get a lot of times on the support line is a fiscal officer is going to call in and said, at last night's meeting, the board voted to give the street superintendent a 50-cent raise back to January. And the first thing I ask is, based on January paycheck dates or based on first day worked or earned in January? And they don't know. So you got to teach your fiscal officers, hey, you are the one that's going to sit at that meeting and tell the governing board you have to be more specific. Is it as of the first day of January, or is it as of the first paycheck in January? And often they don't know the answer to that. And you can't just make it up as you go. If they didn't specify and there is absolutely no information to base that on, you're guessing what they intended. So my hourly biweekly employee should have had a pay increase January 1st in the middle of his pay period. So this is his anniversary. We see a lot of clients that have their employees, they get their step raise on their anniversary date. And he was hired as of January 1st. What idiot decided that was a good idea 10 years ago is beyond me. He started on a January 1st, and he is entitled to the raise as of work days, not paycheck dates. He was supposed to get that raise January 1st, but the fiscal officer didn't update the pay rate until the paycheck dated 3/18, which had a March ending pay period. So she knows when he should have had the raise as of January 1st calendar date, not paycheck dated January. So the March OPERS report was submitted to OPERS with complete and accurate pay rate. So the first thing you have to do is figure out, when they corrected the pay rate, did that only correct one of the paychecks on the monthly report, or did it correct both? Because if the fiscal officer fixed this on the second paycheck with a March ending pay period, that means the first paycheck still gets retro pay, and we have to do something about that. So how are you going to calculate OPERS and OP&F? We're going to look at the wages and overtime summary. Now in this case, it's his earn date starts January 1st. So he doesn't get the raise on this January 14th check because it's not included in the pay period. He has not earned January 1st wages. This isn't what it's paying for. So I know I can eliminate this one. No retro pay. So this is different than the board voted last night for retro pay back to January. This guy's raise is not effective until January 1st. So it's really the pay period we're looking at. So then I black that one out, and now I look at the next one. Well, it starts in December and ends in January. And so I know he's entitled to the pay increase from January 1st through January 7th. Not 12/25 through 12/31. So you're really going to have to pull the time card, because if he has overtime and holidays and things, you're going to have to see which side of the pay rate those fell on. So I can see from this report he had no overtime and he had 16 hours of holiday. Well, one of them was Christmas and the other one is New Year's Day. So he is only getting a raise for the hours from January 1st through 7th, which is 8 hours of New Year pay and 32 hours of regular. And then I'm looking at this last one. Last paycheck was paid the correct amount, so I'm eliminating that from the list. Okay, so now I have a grid that shows me what I need to calculate, but the first paycheck is not a full retro pay raise. So I'm going to put together my spreadsheet. Remember, I have to create this by paycheck by month. So I'm going to show my first paycheck 12/25 through 1/7. I am only paying 40 regular hours. So the holiday is going to be right in this mix. So all I know I am paying 40 hours of regular pay retro at 50 cents an hour. It's giving me $20. And then the second paycheck is harder because he had 80 hours regular pay and 12 hours of overtime. So the 80 hours times 50 is 12 hours times 75 cents, because that's time and a half. The two together give me $49. So my January OPERS retro is $69. And I do the same calculations to February. And then I do my supplemental retro pay report. So here's January, $69, $6.90, $9.66, $84.50, $8.45, $11.83, and then I add them all up together, because when I add the one retro pay check in UAN, I have to check and see if it's withholding $15.35. If not, I have to fix that. And you will get the pop-up message that says you shouldn't edit the OPERS amount, call UAN. And this is one of those rare times where if the employee share on all the individual reports add up to $15.37, I have to make sure I'm withholding $15.37. He's got to pay his own 10%. Okay, so per item earning is the best option for doing retro pay. You do not want to add retro pay hourly, retro pay overtime, retro pay leave. That's crazy. Just figure it out on paper and have one per item type. Now, I know that per item wages are not qualified for OPERS, and some are qualified for OP&F, but this isn't a per item earning. This is just a it wasn't earned per item. It is simply using the per item earning type in UAN to pay one lump sum of retro pay. So we still say use that. The software lets you attach the state retirement to it when necessary. Okay, and Social Security, add the retro pay earning, still recommend the per item type, and there's nothing to back report. It's all the taxes are associated with the retro paycheck. So on the earning, this is what it's going to look like. This is our hourly employee. Over to the left, it's got his details of his employment. I choose the retro pay earning because I've added it at payroll, maintenance, earnings, and leave. It's an hourly type earning with the name retro pay. I'm using his regular frequency, and I'm leaving the pay rate blank. Zeros, well, you have to put in 0.00. Now, on the withholdings tab, you have to withhold all taxes. So taxes and your state retirement. But I am not going to withhold deferred comp, dental insurance, or health insurance. That comes out of his regular paycheck. So none of these have anything to do with the retro pay. I don't attach them. And now the accounts are complicated because this employee works in several different areas in the township. He gets paid from the general fund when he cleans the town hall. He works on roads, cemetery, park. He's all over the place. So how do I determine how to split the retro pay? Well, I would recommend the wage earning report. So if you go to wage reports, wage earning, and go to the sort, you want to mark it for the paycheck range. Go back. I knew I'd click on that. The range here, I use selected period because I don't want to mark the year because it'll pull in wages that don't qualify, right? So I'm going to pull in the range of paychecks. So this is my first paycheck date. This is my last paycheck date that are getting retro pay. And on the sorting tab, group by account code. So this report can be sorted and fixed to print in many different ways. But I needed this employee's wages in that time period to show me by account code. All right, so this is an example. Now keep in mind, and I just thought, Trina, how far do you have to go? So you can see on here the holiday leave paid right here. It would be half of that. Remember that on his first paycheck that qualifies, Christmas pay is an 8-hour holiday and New Year's Day was an 8-hour holiday, but he's only getting paid retro pay for one of them. So even though I printed this report, I would actually have to split this in half on every account that had holiday. And I'm not going to go through that math. Let's pretend for a second that is not part of the calculations. So I can see how much totaled by fund. Each of his pay is in a different fund. If he had 2 accounts within the same fund, you'd have to calculate those separately. But general, street, cemetery, park. And I've got the total gross paid in each one. Go back. And so I calculated the percentage of that. And those Excel spreadsheets are so wonderful to do this in, isn't it? Because I just said, what's the percentage of each of those? I've got it on my spreadsheet. And then I put those exact figures, 8%, 56%, 26%, 9%, and it only adds up to 99, not 100%. So this happens in spreadsheets. So if you bump your spreadsheet up to show the point, this is a level of crazy you probably don't want to deal with. So when you do this as a percent split, you can get those fractions of cents earning differences. And instead of going this route, I'm just going to bump the general fund up to 9% because that'll give me 100 because my general fund can take the hit. So there's the easy out for that one. 9% is going to go in the general fund and that's going to give me the split. I'm going to keep all this information, how this was calculated for audit. So I'd have to actually make a copy of the time card so I could prove these are the hours from January 1st forward. Okay, so now I've got this record and all this information for audit. Sometimes, we saw this in 2021, a guy figured out that he had been underpaid for like 10 years according to the ordinance, and they owed him over $100,000. That was a really foolish counsel because that was a whole lot of raise that should have never been built into his wages. But who are we to decide that? It's actually in an ordinance. Somehow he discovered that he hadn't been paid according to the ordinance and they owed him all that retro pay. So when you are earning more over the Medicare limit for the year, you have to start withholding the Medicare HE. And that's in the software already, but a lot of people have deactivated it. So you might have to look at the inactive. If you try to post a large pay that hits the Medicare HE qualifications, the software won't let you post it. You have to go edit the employee, add the Medicare HE, and attach it to the earnings. And then when you add the retro pay, it automatically figures the right amount of Medicare and the right amount of Medicare HE. The software handles it beautifully. So you've got to watch out if you're ever dealing with one of those very large retro pays. Okay, let's open the floor for discussion. Does anybody have anything else to add on retro pays? Has any of you had to do a retro pay this year?
I did.
Okay.
And
Were they
Several of them.
were they state retirement members?
Yes.
Okay.
Absolutely.
Yeah. So you had to do the individual supplemental retro pays.
right?
reports.
With all the trustees.
Oh yeah. So the did OPERS tell you they had a form where you could list the all the retro pays by pay period, or did they have you do the individual UAN retro reports?
Well, I was doing with a client, of course, but she took care of it on there with, the communication with OPERS, but I helped her set up all the supplemental reports.
Okay.
UAN.
Okay. Okay. Thanks, Tony. Does anybody have anything else to add on retro pays? You just got to be really careful. Go ahead.
Yeah, it helped Bridgeport do a retro pay in late April for a whole year
Yeah.
for every department, which I told them I sort of was very adamant that they should never do that ever again because that was a real pain.
Oh, it's horrible. And, the governing boards don't realize the work involved in giving somebody a raise in the middle of a pay period and giving retro pay back to January. And when I was in Sabina, when one of the council members came to my office and he said, one of the employees just keeps coming at me saying they should have had a raise in January. Well, they were on a pay scale. They got their regular raises on a pay scale. There was no reason for him to be whining they hadn't had a pay. They had all gotten regular raises according to the pay scale, but he just kept whining. And here this council member came in and he said, I think I'm going to bring up that we should give a retro pay back to January to all our employees. And I said, so basically what you're going to tell the public is you should have given your raise in January, but you just didn't want to do your job for all these months? And he said, oh, well, it does kind of say that. And I said, yeah, it makes you look really foolish. And they never did it again. So if you want to give somebody a raise, give it to them now, for pity's sakes. Don't. But in a lot of these cases with the union contracts, you don't have a choice. The union contracts include retro pay, and they're not going to get their contract passed without it. So some of these folks have to do it every single time. Every year they've got retro pay.
I was going to say that for OP&F, you don't have to put in like a separate form. Basically, for the employee, you just have to put in a different code.
Oh, excellent.
To help someone do that. Yeah, so because like 0 is the regular pay, 2 is overtime, and I think like the code 6 or 7 is like the retro pay. So they make it like a little easier.
In some ways, OP&F, they make up for all the difficulty of the regular monthly reports. Thank you, Hoy Wall, because I really had never had to do one. So if I look at maintenance, earnings and leave, and let's say this was I'm going to add.
7 is actually additional pay, so maybe it's 6 in OP&F.
It is supposed to be 6.
There it is. Yep. So you would code the retro earning 6, and instead of doing supplemental retro reports, it's just going to pull into your next pay period, your next monthly report with this code on it. Outstanding. I did not know that. That's a whole lot easier than OPERS.
Yeah.
I mean, the way OPERS is doing it, though, if you've got an employee that is right on the edge of making $1,000 a month and they're not quite there, that retro pay split up by monthly report could end up giving them all those months bumped up over to get full monthly credit. So it is important with OPERS to get that right, because it can mean the difference between someone having enough qualifying months to retire or not. So I understand why it has to be done that way, but I'm really glad OP&F has a code to pull it into just the next month. Outstanding. Okay, thanks. Let's go on to the next. Okay, lost paychecks. So reissue. Oh, please, reissue. Teach those clients. We keep getting people calling, somebody lost a paycheck, so I added a new one. And you can't add a new wage for one that's already in the payroll software. You just reissue it. So I know you guys all know that. But This is how you replace a lost paycheck in a current year. It preserves all the tax and retirement from the initial check inside the reissue. It voids it and it prints it on the next good check number. And of course, what happens next is the employee finds the other check and cashes them both. That's a whole nother issue. So if that happens, give us a call. We'll help you get that back in. But you definitely don't want to void the first check because it's already had taxes and retirement reported. You don't want to add a new paycheck. You just want to reissue the old. So encourage your clients to review the outstanding checklist every time they post a bank rec. That outstanding checklist prints. You know, once an employee's paycheck hasn't cleared for 60 days, call them, because you know, the longer this goes, the longer your list is going to be. And you really want to be following up on those all year long, because we get lots of calls like on December 6th. I've got 18 paychecks that haven't cleared the bank. I'm going to reissue all of them. Okay? Except they haven't touched base with the employees, things like that. So get them to start looking at that outstanding checklist and follow up with vendors. Checks are going missing in the mail for vendors all the time now. So they want to be following up faster than the old days. That's for sure. Okay? You can't reissue a prior year check. It can't be done. There's no way to do that because it was posted in a prior year. But there is the correct process to do this. Cannot put a replacement check back in payroll. So I was on the phone with a client a couple of weeks ago, and she could not have done this worse. Couldn't have done it worse. So she did not call us in January. An employee had a check from June 2021, and in January, she decided to void the June check. So of course, she's got withholding overpayments, so she went through the whole process of voiding and creating all those withholding overpayments, but she had already filed the W-2s that included that income. She had already paid all of her tax and retirement for all of those, and had done her state reconciliation of taxes, and then she voided the check. So there's no refund coming back, because her reconciliation of taxes showed that she paid and reported exactly what the W-2 says. So it could not have been done worse. And then to make it even one level worse, she added the new paycheck replacement in payroll in 2022. So now he's going to have a W-2 in both years that contains income he only got once. And she has never filed any reports to get those refunds back. So encourage your clients to call if they've got things to do, because we do this all day, every day, where they might run across this once in a whole lifetime. So if they're in temp mode, and this is what she's doing, she's like, I'm in temp mode, I'll go back and void the June check. No. It's already been reported and paid. You do not want to go back and void it. So in the new year, all she had to do was an accounting payment for the net paycheck. So there's no actual reissue button, but because it's already reported and paid in 21, she just needed to do an accounting check for the net check. And then after she closed 21, do the fund balance adjustment, voiding the prior year warrant. It does not put unpaid taxes back in the payroll software. So we would have told her, don't add it back in as a wage, ever. You're going to put it the net amount as a check in accounting. And so we had to think outside the box to get, and this employee now has a W-2 last year for the same amount he's going to be taxed in the current year, and he was a Social Security member and not OPERS, so didn't affect OPERS, but he's taxed twice on the same number. His W-2s show he paid it, and it's a mess. So never add a new wage to replace a lost paycheck. So if it's a prior year check and you're in the new year, You're going to issue the net paycheck from accounting. Voided the wrong wage in payroll utilities. So, client should have voided check number 97867, but she went to void it and it said you've got all these withholding overpayments. So instead of voiding the one that should never have been posted, it was a mistake, she voided the very next outstanding check, which has cleared the bank. And it's the later month and the pay was a different amount. I can't believe it when they're telling me these things. So check number 97867 absolutely should have been voided, but it's had withholdings reported and paid. That still has to be dealt with. It does have to be voided, and she's going to have to file amended tax and retirement reports. And now check number 97902, which was posted and was still outstanding, hasn't had its real withholdings reported and paid. So we've got two problems because the original problem hasn't been solved and we made it worse. So when you've got somebody who's voided a wage that actually has cleared the bank, it's a real wage, the solution is going to depend on the dates involved. Did this happen in the current month or 3 months ago? Have bank reconciliations been posted since the original check post date? Because once you post a bank rec, you've locked down the date, and taxes are associated with the paycheck date. So we need to know if we can backdate something in the same month on the same date as the original check that shouldn't have been voided. Because we've got to get this check 97902, all its details back in the payroll software where it belongs. Now, if they pay taxes on a biweekly basis, it's extremely important to use that original post date. If they pay quarterly, their 941 quarterly report will still show liability in the 3 months. Now, I don't think it does. I think when you file monthly, it shows the liability in 3 months. Quarterly, it's not. So evaluate if it's in the same quarter. If you can put that correction in the same quarter, if they're quarterly payers, you've got some options. But you want to be as careful as possible with this. So if you're talking about the same month, so let's say she should have voided a February check, but instead she grabbed a May check because it was the only one outstanding. It's not the right amount. Oh well, we voided it anyway. So I haven't done the May bank rec. I can still get back into May to get this in here. But so if we're talking about something that happened in May, was originally posted in May, and I'm sitting here in June and I can still get things posted in May, I'm going to use the manual warrant option. What it's going to do is use the next good check number to replace the one that was accidentally voided. And the reason I would use the manual warrant option is because it can be backdated to the original post date. Really, really important for taxes to be associated with that original post date. All original earnings, employee-employer withholdings have to be exactly the same as the original wage. They have to match exactly. And you say this to people and they say, it's exactly the same. And then they say something like, well, the school tax is different, but that's okay. No, it's not okay, because that would mean the net paycheck is a different amount. It has to be exactly the same. So sometimes you have to manually change the taxes to match the check that actually cleared the bank. So on the bank reconciliation associated with the date the UAN voided check cleared the bank, you clear the replacement warrant because that original check is going to appear voided. So you have cleared a check in its place, and you're going to cross-reference that for audit. Now, this is not usually going to be that easy because they're calling you and it happened in February and they haven't solved it yet. So it's voided in an earlier month and the bank reconciliation for that month. So we've already posted the May bank rec. I can't use a manual warrant anymore. That's not a solution. You take it off the table. So if I can't backdate it to the date of the original warrant, I'm not going to use the manual warrant process. Sometimes we have to go a different route, and that would be a conversion wage plus an accounting electronic payment. So why do I need both? Well, the conversion wage in UAN is used when we get a new client on payroll, and they're coming in on payroll on June, and they need to bring in the January through May year-to-date wages. A conversion wage pulls in all of those details of their year-to-date pay, but it doesn't spend money. It does not create unpaid withholdings. It simply provides history for tax and retirement reporting and the W-2 at year end. So the problem with that is the accounting electronic payment has to be used because a conversion wage does not spend money. And we're still going to have to clear something on the bank rec, right? That check cleared the bank, but it's been voided by accident. So I need both processes. I need the conversion wage so I can backdate. So conversion wages can be backdated behind a bank reconciliation. So that's why conversion wage is an option. I can backdate this to the exact date of the original item in February, for example. And then I do an accounting electronic payment because clearly they have posted bank reconciliations with payments not in UAN for several months. So I do an accounting electronic payment for the net paycheck to the employee to replace check number such and such, voided by accident. And all you can do is backdate it as early as you can. So if they've already posted the May bank rec, I'd be dating that in June, today. So the accounting payment is now, but the payroll software has been corrected to get tax and retirement reports. Now, conversion wages do not create unpaid withholdings in payroll. All they're going to do is put the history back in. So any of those wages, let's say this was a February check that was voided, and I'm just now putting it back in the payroll software for February. My first quarter 941 did not include that. So I have to do a new first quarter 941, and I would call it amended, and then I'm going to get the 941X report from the IRS. I'm going to make that supplemental tax payment online at EFTPS for the first quarter that goes with my 941X. So you do have to back pay, and yes, I'm going to get a penalty. Same with the state, any local taxes, you'd have to file amended reports if that voided wage had not been reported and paid where it belonged. So you have to check and see. If it had already been reported and paid on anything, they would have created withholding overpayments. If they didn't create withholding overpayments, it means it was voided before anything was paid. So you'd have to pay those from accounting and manually do the amended reports. Why do they do this? Yes, that's exactly what I just said. Reported, paid, and posted in accounting. Penalties will be applied. Some of them, like state, would be automatically applied. Others, you get a bill later that you pay, but those penalties are going to be paid from accounting. If you've got a real mess of one, call us and we'll help design a plan that won't duplicate the taxes in retirement that have already been reported and paid. Okay, anybody had to deal with that situation or have any questions about that? Sometimes it's shocking what these people get up to. I'll never understand why voiding the wrong thing could possibly be the right answer, but that one's crazy. So you can see we think outside the box. When we're dealing with payroll, sometimes you have to think about, how am I going to get that back in payroll? Because I can add the accounting electronic payment in accounting and clear it on the bank records, and I reconcile. But his W-2 is not right. One of his paychecks was voided. So he's not getting credit for withholdings paid, not getting credit for retirement earned, and his W-2 is wrong. But you have to correct both accounting and payroll, and to do that, we've got to find the tools in both places to do it. That one stunned everybody into silence. Okay. All right, I'm going to move on to the next one. Wage adjustments. Beware of wage adjustments. State retirement, pre-tax item, people use one word and they say things are pre-tax. But state retirement salary reduction, CAFE plan, and deferred comp non-Roth affect tax bases in different ways. They don't affect all the tax bases the same. And there is a place in the payroll software is my go-to when someone calls and it's all about a pre-tax item that has to be refunded. I'm going to go to payroll, maintenance, withholdings, and withholdings editor. And that blue question mark in the bottom right corner right there is going to show me these things. The tax nature, the pre-tax nature of these items. So up at the top, I can see that Medicare, Social Security, and local tax don't include fringe benefit, OPRs, and OP&F, but they're only reduced by cafeteria plan. So salary reduction, OPRs, and OP&F, and deferred compensation non-Roth don't touch Medicare, Social Security, and local tax. Not at all. But if I drop down to federal and Ohio, they are the same as school taxes. So you see both down here in the two school taxes, state income tax wage base, which is traditional, is identical to federal. Exactly. Which means it's also reduced by personal exemptions. But the earned income only is identical, except it's not reduced by personal exemptions. Now this would not affect the difference between these two states or the two schools. The way they're calculated on a real wage is not going to affect refunding an item that was pre-tax. So if I was, let's say I was withholding $200 a paycheck for one employee for deferred comp non-Roth. So that affects my federal, Ohio, and school tax base. He's got a school tax. And so I withheld it from his check and tried to pay it, and deferred comp says he canceled his coverage, you can't pay it. So now I have to give him back his $200, but I have to tax it. Now remember, Medicare, Social Security, and local taxes weren't affected at all. This pre-tax item did not change those tax bases. So I am not calculating new taxes on those three at all. I am only going to look at state, federal, and school. He has a school tax that's 1%. So I'm going to take the $200 refund and multiply it by 1% and take that out of school tax. And now you say, well, what about the federal and the state? Federal and state taxes on $200 are not significant. I don't even mess with them. So if I was refunding $6,000 of pre-tax something, yes, I would go to the trouble of figuring out the federal and state tax. But only the taxes that are an exact percentage really need to be dealt with on a number this small. So in the wage adjustment withholding refund, I would put in the minus $200 to give him back his deferred comp non-Roth, and then I would enter the amount of school tax based on the school tax rate. And the state and federal tax bases will be corrected and increased by $200, but I don't have to bother taking out more tax for that because it's going to wash out when he files his tax return. That $200 is not going to be significant enough to bump him into another tax bracket. I can't imagine. So how much time would you like to spend doing this? In the case where you're withholding or returning a pre-tax item, state and federal rarely has to be figured because you're really dealing with insignificant amounts. I said when it gets up into the thousands, yes, deal with it. So let's talk about if it's a CAFE plan. So the cafeteria plan affects every tax base. So let's say we've got an employee that's withholding $150 a month, cafeteria plan insurance, and they canceled their plan in the middle of the month, and we collect ahead of time. So when I posted the May paychecks, that is the amount they were paying forward to June. So I know when he canceled his insurance as of May 31st, I owe him back that money. It's not the same for every client. Some clients, they are withholding backwards. So even though they're using the May withholding to pay the June bill, the employees are contributing afterwards to make up what they owe back for what was paid in May. It's very different entity to entity. And when you ask fiscal officers, are you withholding ahead or behind? They rarely know what you're talking about. And if they weren't the person that set up the system to begin with, that conversation is gonna take a long time to figure out. You have to know whether you're withholding ahead or behind, and it doesn't matter that you're using the withholding on the June payment, because the software lets you use what was withheld last month to pay the new month's bill. Doesn't mean that's the coverage that came out of those checks. So you have to know that. But let's say last month I withheld $150 and they canceled their policy and I owe it back, and it's CAFE plan. So, and they're an OPERS member. So I know that Medicare, local tax, state and federal, and school tax are all affected. So when I give them back the $150, all of those tax bases are going up on the W-2. That becomes taxable income where before it was not taxable. And I am going to figure Medicare at 1.45%, local tax at the exact local tax rate that they're attached to. I'm not going to figure Ohio and federal taxes on $150. Again, how much time would you like to waste? And school tax is the exact percentage of the school tax, regardless of which type they have. And when you do the wage adjustment, it's a minus $150, so that the employee's going to get a refund of that, but you are then taking out the taxes that has to be withheld from it, and they get the net paycheck. So pre-tax does not mean the same thing, and I use this withholding editor blue question mark to get my eyes on this every time. I don't trust my memory. I could probably recite this, but I always have to have my eyes on it to make sure I'm not making a mistake. Any questions about those? We had somebody email in this morning about Roth and non-Roth. So I want to bring that up again. Have any of you come across the people doing Roth deferred comps so far? I know that's been around for a couple years now, but not everybody's touched it. So if in withholdings, we have a default process group called BOO right there. That is the deferred compensation non-Roth. So it's pre-tax for federal, state, and school. But if they are going to do the Roth deferred comp, you've got to add a new withholding, and it needs to be clear. And the process group is miscellaneous because there is no tax benefit in payroll for a Roth type. So you have the same payee if that's what it is. And so the Roth one is going to be down here, and the non-Roth is up here in the list. I know, oh, it's right above it. So one is pre-tax, the other is not. So in the software, they're set up differently, but with the same payee. And we'll touch on that, I think, again. Okay, so this is the presentation. Well, it's kind of I've changed it a bit for you guys, but we were seeing so many investment setup errors for our outgoing fiscal officers. The newbies are coming in and they're finding all kinds of things wrong with the way the investments were set up by the former fiscal officers. So I went through this at the OTA. I took a big risk thinking that I'm going to have a room full of people that have no investments, but there were maybe 20 people in the room that didn't have investments, that were bored to tears through this. But the rest, lots of people found that they did not set up things properly, they weren't managing them properly, and they really did need to make some corrections when they got back home. So I want to go through some of these. The biggest mistake people make is pooled and non-pooled. I mean, this is the old software. We're talking pre 2013 for accounting and payroll users, and before 2012 for accounting only users. The software did not handle pooled investments the way it needed to. It had limitations. So in the old software, if an investment was pooled, meaning it's not owned by a particular fund, you still had to transfer money from funds to get there. But that was because of the limitations in the old software. When they rewrote, they've done it the way it needs to be. Pooled investments have no fund ownership. And we had a lot of people freak out from the old software to the new software because that fund status used to show funds that aren't allowed to receive their own interest as owning an investment or a piece of a pooled investment. And again, that was limitations in the software. The actual laws on pooled investments and non-pooled investments never changed, but the software was improved to take care of it. So this is what the biggest problem we're seeing in setup is. Now remember, this blue question mark is going to give you extra information. The only time an investment can be non-pooled if it's going to be owned by a single fund, and there are only particular reasons to do that, and that fund has to be legally permitted to receive interest. So for example, my cemetery levy, my road and bridge fund, my park levy, my fire levy, none of those funds are legally allowed to receive their own interest. And for villages, that would also be your water and sewer funds. You can't receive interest into those funds. It's the general fund gets the interest from those. So if those funds are not permitted to receive interest, they cannot own an investment. But of course, you can invest money, just not on fund balances. So a pooled investment has no fund ownership. It is simply money that is available to invest. It is not needed in the checking account right now to pay bills, and it goes to an investment where it earns a better rate of interest. So we see that a lot. So here's my examples of some of our big problems that we've got in the non-pooled investments. So these are private purpose trust funds. We see a lot of these with townships with their cemetery bequest funds. Libraries often have endowment funds where money is donated. You are told you have to invest this portion. You can't spend it, and you can spend the interest on a private purpose. So in these two, we have the Buckeye Monument Trust. So we have this huge cement Buckeye in the middle of our cemetery. It's beautiful. And that was donated to us, and they gave us $3,500 years ago. And we can't spend the $3,500. It is non-spendable, but we can spend all the interest earned maintaining the monument. It's not our monument. It is the Monument Trust. And the Buckeye Cemetery turned over $13,000 to us. The Cemetery Festival turned it over to us, and the $13,000 is donated. It's non-spendable, and I invest that amount. So this is what that would look like. I am investing the non-spendable balance, and when I set the CD up at the bank, the interest is not reinvested because you can't spend interest from a CD. And we see these all the time in these bequest funds where the interest is reinvesting on the CD. So the problem isn't that the UAN software won't allow them to spend the money. It's they've locked the money on the CD. It can't be spent. You can't write a check from a CD. So they should have set these up at the bank so you're investing the non-spendable balance and the interest. So you can see that my fund balance is $3,611.59. This is the non-spendable portion we're required to invest, which means I know right this minute I have $111.59 in interest that could be spent if I have appropriated it. Same with this fund, $13,911.15. I invested the non-spendable balance. The interest pays into my primary checking, not reinvesting onto the CD, and I know by this that I have $911.15 of cash, which is all interest earned over years which could be spent if I had appropriations to support it. So most of the time what's happening is they've put the CD at the bank, it is reinvesting interest, so the non-pooled investment is exactly the same as the fund balance. And then they go try to buy flowers for the grave, and there is no money in the checking account to pay the bill. It can't be done because it's sitting on a CD. So they're setting them up wrong at the bank. The software's not doing anything wrong. So how do you fix this? Well, I forgot I did that. The at the bank, when this matures, so let's say that this investment was the fund balance. So I have a CD, $3,611.59 at the bank, and it's just matured, the final interest was paid, and I go to the bank and I say, I want you to take $611.59 out of there, transfer it to my primary checking account, since it's the same bank, or to give you a check if it's a different bank. And then I want you to roll it over for just the $3,500, and I want the interest paid to my primary checking. So if it's a different bank, they're going to send you a check, right? And from that point, your investment is only the non-spendable balance. So it takes time. You have to hit the maturity date. You have to know your non-spendable balance. Some of them don't know this. They've inherited the system where the CD has locked up all the money. So it has to be researched and found what the non-spendable balance is. And then in UAN, if the old CD is the $3,611.59, when it matures, I've posted that final interest. In the old investment, I'm going to transfer from investment to primary $611.59, and then I'm going to close the item and roll it over to the new investment, which is $3,500. So I could also just close it and add a new CD for just $3,500, but that rollover process would do that for me beautifully, as long as I transfer out that spendable interest. And then from that point, it's set up right to move forward. Okay, a lot of people picking the wrong type here, and that's a no-brainer. If it's a certificate of deposit, it needs to be marked certificate of deposit. If it's a treasury bill, it's a treasury bill. And if it's not any of those things, it's other. The interest setting. So we get a lot of people that don't understand what this means. So the reinvestor posted primary doesn't say what fund it goes into. That says which bank account the interest pays into. So if your interest adds to the value of the investment, it's reinvested. And this is right here. And if it either direct deposits into your primary checking or they send you a check that you deposit in the primary checking, then it's received interest to primary checking. So this setting on the investment should be set up exactly as it is at the bank. So when you add the receipt for this investment, it automatically chooses the setting here. So we see clients, I had one on the phone last night at the end of the day. She didn't set it up with the right setting in the add or edit investment form. It's never been changed. So she relies on herself when she adds the interest receipt to correct the selection. Well, why would you do that? Why don't you just set it up here? You just go edit the investment and fix the setting so that every time you choose this investment on an interest receipt, it automatically pulls in with the right setting. People don't realize that that can happen. So it's the interest receipt itself. When you post the interest receipt, that's when it determines the allocation between the funds. And I was really surprised at the number of people at the OTA that did not know this. So this is an interest receipt for my primary checking, and the primary checking is considered a pooled account. It's not an investment, but it's a pooled account that receives interest. And the primary checking, when you add an interest receipt, reinvest and post to primary are both grayed out, but they mean the same thing. It's the primary checking. Either one of those would be the same for the primary checking. So it's grayed out and says reinvest. Not really difficult. Down here would be every single fund on the left, and then the account code that will receive its interest. So you can see these first two funds get to keep their own interest. But these, all the way down to 2273 up to 2031, the general fund is getting that interest. So this is my road and bridge, not allowed to keep its own interest. My cemetery, park, and fire levies not permitted to receive their own interest. The general fund gets it. And this is my ARPA fund that I'm using it as an example. So CARES Act had to keep its own interest. That grant said you had to earn interest in the CARES Act fund, and that was such a pain in the rear. People are trying to spend 100% of that fund before the deadline, and they earned 3 cents interest. You had to get an amended certificate for 3 cents. The board had to appropriate 3 cents, and then you had to spend or reallocate a payment for 3 cents more. But the ARPA fund is different. The ARPA grant says that it could be either way, that you can retain the interest, or it could be general fund unrestricted. So a lot of our clients went the unrestricted way, and of course you would want whatever documentation that you are required for setting up a fund, because we hear sometimes from people who said their auditor asked him to produce a resolution that showed that the fund they set up was not supposed to receive its own interest. And of course, they didn't adopt a resolution. There's nothing in the minutes that say that either way. And auditors are looking, when it's a conditional interest fund like ARPA, they're looking for the decision that made it to unrestrict the interest. So if a grant or an item is going into a conditional interest fund where you are permitted to make the choice, you have to look at your grant documents to see, and then at least get something mentioned in the minutes if you're not going to have a resolution adopted. And you'd have to talk with your legal advisor about whether you're supposed to be getting resolutions adopted. But the auditors are asking for something. So at least get it in the minutes that you've added the ARPA fund, and get people to motion second and vote that the interest will go to the general fund if it's a conditional interest fund, and then make a copy of those minutes, highlight it, and stick it in that file for the fund for audit, so that they're never going to make you move that back. So anytime it's a conditional issue, make sure you've got documentation that it's been decided one way or another, or they'll audit adjust it. So every single fund that has a pooled balance is going to be listed here, and every account code that's associated with the interest is going to be listed. Now, I thought this was funny. The software has had the ability to do this for many, many years, that if you have a pooled account, so the primary checking is a pooled account, or an investment, you can check the box to distribute proportionally by pooled fund balances, and the software will distribute the interest. The only people that can't use this option are people that have a negative fund balance. So we've got folks that carry a negative fund balance, whether they were in fiscal emergency or they've just done something stupid this year, or audit adjustments put them in the negative and they'll be out of the negative before year end. You're not going to be able to use this option if there's a negative fund balance. And I even had somebody argue with me that during the bank reconciliation in April, they did not have a negative fund balance. And so the software should do the distribution by pooled balances on the April receipts. But audit says, yeah, no. If you have a negative fund balance after that date and you are trying to backdate an interest receipt anytime, all interest receipts will default. You can't check that box. So as long as you don't have a negative fund balance, you should be able to check this box, and the software is going to give you this total box where you type in the amount of the interest on the bank statement, and then the software distributes it automatically. So I do get people who are calling in and saying, why is this fund getting a penny interest? And why is this one getting none? Well, you remember this fund only had $111 of pooled balance. That $3,500 was non-pooled. So it's already earning interest on the $3,500. There's only $111 in the pooled balance, and with an interest as low as $25.21, it would only be getting a fraction of a penny, not enough to round up to a penny. So if you've got a zero on there, you can just click the X. I believe the software will let it post with a zero in there, but I think I might clean it up. I don't know. And then I'm thinking maybe I would just leave it in to show the software did distribute a zero to it. But I have people arguing with me that this fund should not receive primary checking interest. Why? It has $900 in the pooled balance. It's entitled to its penny. So it can earn interest on the interest. There's nothing wrong with that. So our dates, interest receipts should always be backdated to the date they land in the checking account. So nobody knows ahead of time what their interest is going to be. You have to wait to see the statement, even if it's midnight after the end of the month. You can see what your interest is, but you're going to backdate it always into the month it was earned on the bank statement, so that you can clear the item instead of adjusting it. Receipts not in UAN. This is Star Ohio. So this is another pooled investment. We have one Star Ohio account. It has no fund ownership. It is simply $800,000 of cash we don't need in our checking account to pay bills. Boom. We've moved that over. It's been declared interim money or inactive money, and we can invest it. So same thing. I'm going to mark it here. Now, in my example, I'm reinvesting it, but I did talk to a client in the last couple of months. Her Star Ohio interest pays into the primary checking. So I think you can arrange that. But you have to set this up the way it is at the bank. So again, I have the same funds. This is a pooled investment, no fund ownership. The software is going to show me all of the funds that have a pooled balance and all of the account codes that will receive their distribution. I'm going to check that box, type in the total, and the software is going to distribute it for me. Now this is an example of a non-pooled investment. So this is my Buckeye Monument Trust CD. It is non-pooled, so it's owned by this fund. I have it attached to this fund, and only one account code appears. It's receding to primary because if you have spendable interest, you need it to be where you can write a check. And only one account code, so I'm just going to click on those zeros, type in the 96 cents of interest we received, save it, and post it. So very, very simple. And so, my clients aren't set up correctly. What do I do? Carefully evaluate. So that's the key. We get a lot of fiscal officers that go over to help a neighboring fiscal officer. So they've never seen what you see. They're good at their job. They know how interest receipts get posted. And they go over there and they look at, let's say, the investment activity report, and it shows interest has never been posted to that CD. So they go in and start posting interest receipts for the last 2 years. No. So some of these fiscal officers, because the interest is paid into the primary checking account, they use the primary checking account as the source for all their investments rather than choosing the investment and have it marked post to primary. So they think they have to choose primary to post the CD interest to the primary account. And so you can't look at the investment activity and say they've never posted interest receipts, because they did. So they jumped in and posted a bunch of interest, and then they're out of balance by all those interest receipts. So use training mode to try corrections. Get your clients to do this as well, and call us if we can help you, because I've seen places that have 24 CDs and 2 renew every month. And that is a crazy mess to try to stay on top of. And so what happens when you have all those 24 CDs all paying interest twice a month, once a month, that's a lot of interest receipts. And sometimes they'll grab the wrong interest receipt and post the $96 on that one, and then grab it again and post its own interest to it. So your cash value's gone up by 2 interest receipts. If they're both post to primary, the primary checking account has the right amount of money, but the wrong CD earned it. So if you're looking at the investment activity, it would look like that investment didn't get a CD or interest posted in a certain month, because the investment activity shows the ones that are reinvested or not reinvested. But if you looked at the other CDs, you would find one of them had 2 receipts that month. So carefully evaluate. Sometimes you got to look at all of the investments to see if interest was posted to the wrong one. So then you can say, okay, you're not out of balance because all interest was posted, but the wrong source was used. But since they both were posted to primary, it's not an issue. because it both went into the same bank account. So there's a difference between investments being managed correctly and being out of balance. My favorite is investment activity. The problem is if they haven't posted the interest against the investment that earned it, you're not going to find an investment activity report with any activity. You would have to look in the receipt reports for the whole year and then look and see if there's 3 primary checking receipts every month, for example. Compare the activity to the bank statements. So is it going reinvested or not reinvested? Did they post the receipt but in a different investment or account? You've got to eliminate all those things. And when I'm looking at the investment activity and I see that it's not the right balance now, what I want to know is the January balance accurate. So the investment activity always shows the January balance, and I need to know whether this is a 10-year-old mistake or whether they've just made a mistake in the current year. So if the January balance is accurate, I know our mistakes are only made this year. It isolates. If the balance January 1st was wrong, some of these things have been wrong for years and years and years, but it's not throwing them out of balance because the interest receipt was posted, but not correctly. So evaluate. Have they been reconciling with the bank? And of course they always say yes, but did they enter adjusting factors to get the green check mark? So if they, yes, I put it in adjusting factor for receipts not in UAN. So that's different. Or I have an adjusting factor for an amount I have no idea, it changes every month. They're not reconciling. They're just plugging in numbers to get the green check mark. So you would have to evaluate much more. But if the answer is they really have been reconciling, then the money is just in the wrong account and can be fixed very easily. But have they been entering the true investment balances? So you look at a bank rec and you say, okay, they're not plugging in adjusting factors. Look at the investment balances they're plugging in. I have seen a lot of people plugging in a 3-year-old statement balance because they don't post the receipts. So they just keep using the old statement balance. They say, oh, it only amounts to less than $10 in interest. I'm not even going to bother with it. Do you know how hard that is for the next person coming in to figure out? It takes, 30 seconds to post an interest receipt. It doesn't matter if it's $20 or 5 cents. It takes seconds to post an interest receipt. They should be doing the interest receipts every single time they earn interest. So if they have been reconciled, so there is absolutely nothing wrong, but the investment balances are wrong because the receipt was posted with the wrong setting, edit the investment and correct the setting first so it doesn't happen anymore, and then correct the investment balance with an investment transfer. So I walked somebody through this. We found 2020 receipt was posted to primary instead of investment, and in April she did a $10,000 transfer to primary that did not happen at the bank. So all we had to do was reverse them with an investment transfer. So interest, if the interest was really reinvested in the system, but it should have been posted to primary, you're just going to do an accounting transaction investment transfer from investment to primary of the total of all the mistakes so that it's the right balance. And if interest was posted to primary where it should have been reinvested, then it's the investment transfer primary to investment. So the key is if they are not out of balance in the bank, they really are using the true statement balances. That means the receipts were posted and weren't posted to the right account. And all you have to do is that investment transfer. And again, a lot of times they'll move money from Star Ohio to checking and they won't do the same investment transfer in UAN. Simple to catch that up by transferring the net amount of what's been skipped. And the investment activity next to the bank statements would show which transfers haven't been done. Closing investments UAN, we're seeing new fiscal officers we connect and they've got 15 CDs that closed years ago. And they're all zero balances on the bank reconciliation. So they're on the bank rec because nobody closed the investment in UAN. You have to actually close the investment for it to stop showing up for years. Yes, many years. and not a newbie mistake. So a newbie has inherited this mess. And when an investment is closed at the bank, of course you have to close it in UAN. Again, you post the final interest, you close the investment just like you did at the bank. I say, but oh, Trina, all those old investments on the bank reconciliation have a zero balance. Okay, prove it. Go to the investment detail report, because these things haven't had activity in years. In the investment detail report, it'll show you if it's got a balance. If it shows a zero balance, go close it in UAN. So accounting, maintenance, investment, check mark it, click close item. And if you're working on the May bank rec, date it in May so that it shows up last. So whatever bank rec you're working on, close an old item as early as you can so it stops showing up on your next bank recs. But I think you're going to find that some of these still have balances in them. So what you're entering on the bank reconciliation, you're telling the software the statement balance is zero, and it also shows the prior balance was zero. So you're telling the software there's no money in the bank and it is reconciling. But in the software, the investment has money in it. You got to fix that. But be careful. If it is anything except a CD and the closing balance, if you try to change the closing balance to the real closing balance, you're going to get capital gains or losses, and the message says, you probably shouldn't do this. It's not reversible. Are you sure you want to do this? Absolutely not. Don't do this yet. So be really careful. Review the investment detail and the investment activity, that should have said, before taking any action. So did it close at the bank 3 years ago? Yes. Has it been reconciling, putting zero in as the statement balance? Yes. That means that the money went into the primary checking and is being accounted for. So if zero is working, then if we close this, it's not going to cause a problem. So if this is a CD, and we see this a lot where people, instead of closing the CD, they'll just transfer the $13,000 from the CD to the primary checking, and then they leave it open. So if you close the investment, it'll put the money in the primary checking for you and close the investment. So when you're looking at a CD, this closing price box is grayed out. It's not going to cause any problem because you are just going to accept what it says, and you're going to use the earliest close date you can. If it was done years ago, you're just going to use as early as you can. And you're going to click the close item, and it's going to move that $13,000 to the primary checking where it's been sitting for years. But when you're looking at an other, so this could be a money market, a savings account, and Star Ohio, and lots of other things. This is my Star Ohio account. So I know that when I closed Star Ohio in December 2021, this was not my balance. However, all of the money from Star Ohio went to my primary checking. I just didn't do anything in the software. If I try to change this closing price to the real closing price, it's going to create a capital gain or loss that is not reversible. And if this is not putting you out of balance, then it is not necessary to put the real closing price in here. This is not a problem. So we get people trying to clean up. They go in without looking further, and they blow right past those. Are you sure this is not reversible? And then we get the call a week later. Well, I need to reverse this. No, can't be done. So you're just going to accept this balance because it's not throwing them out of balance. So it's very, very different if they haven't reconciled for years, and part of this incorrect balance is from mistakes that haven't been posted. So it's very, very different when you're dealing with somebody who has not been reconciled for years. You don't want to just close all the investments because there's been errors in them, and you might need to clean that up first. But when you know it's closed as a zero, it's not causing it, just close it with an earliest date possible. Accept the closing price instead of trying to correct it and locking in that capital gain or loss. And that was that. So in real time, once it's been closed at the bank, post the final interest, look at the investment report, a detail or activity in the system. Is that the correct closing balance? If so, proceed. If it's not that it's probably been wrong for years, and you would have to do that investigation to get it right. But if they've been reconciling, it's the wrong amount is just because they didn't do an investment transfer or didn't post a receipt to the right account. But you really want to find that out first. Closing the investment in UAN moves the money to the primary checking in that close. If you do a rollover like a CD, it's going to roll over into the new CD. Always post the final interest, verify the accuracy of the balance, and then use that rollover option. Okay, any discussion there? I see so many investment mistakes. I saw somebody the other day, she's got the 7 Star Ohio accounts. And she actually has 7 Star Ohio accounts. So she's got a Star Ohio General, Star Ohio Street, which is fine because they can own a non-pooled investment. But why would you want to? You don't need to do that. They'll still get their share of the interest. And then we have Star Ohio Water, Star Ohio Sewer. Those aren't Star Ohio Water and Sewer accounts because those funds are not allowed to own a non-pooled investment. So what they're doing is they're saying they're setting these things up when they're not really. It's not really doing what they think they're doing. It's just satisfying this need to have a fund name on an investment. But in UAN, you can't attach a non-pooled investment to a fund that's not allowed to keep its interest. Okay, let's move on. School taxes. We keep seeing these. Usually somebody has no school tax, and then the local school right there in the neighborhood gets a school tax. So they know the employees that live locally all get the school tax. So they add a school tax withholding and they call it school tax. They don't name it Buckeye Local School District tax. They just name it school tax. And then a year and a half later, you got an employee that lives in a different school district. They can't use the same withholding. So while it could happen, because it would withhold it, it won't be right on the W-2. So every different school tax has to have a different school tax withholding. Every single one of them. But school taxes are paid to the Ohio School District income tax through the gateway. So you're making one online payment for all your school taxes. Now, what we find interesting is people are calling their state tax payee the Ohio Business Gateway. And it's not a payee. The gateway gets no money. The gateway is a website used to report and pay lots of things, but it is not the one getting the money. The money is actually going to the Ohio Department of Taxation for state, and it's going to the Ohio School District income tax through the and the portal you're using, of course, is the gateway. So we really don't recommend using the gateway as a payee because you're creating one voucher for state and school taxes, and you'd be shocked at the number of people who forget they're withholding school tax and they're printing the gateway voucher. And the gateway voucher is a total of all state supplemental, and all schools. And so all they're doing is going online and paying the state tax as the whole. And then 3 months later, they call in and they say, I haven't been getting a voucher for school tax. It's because they have the same payee, the gateway. The gateway's the website. So highly recommend that the state tax payee not be named gateway, but the Ohio Department of Taxation, and the school tax payee should be the Ohio School District income tax. In that way, you get one voucher for the Ohio Department of Taxation that would include the Ohio tax and supplemental, and you would get a second voucher for school taxes, and you use the school tax report to determine which schools get how much. So that separates that nicely so that they're not accidentally paying everything to state, because that is a mess to clean up. It separates the vouchers. You still need the school tax report if you've got more than one school tax. Local taxes, pretty much the same way. The payroll software, there has to be a different local tax withholding for each local tax. And sometimes multiple local taxes use the same contractor. And the one that comes to mind first for me is Regional Income Tax Agency. But I know there's a lot of them out there. I know the city of Columbus collects taxes for a lot of municipalities. So you go to the Columbus income tax website to pay some of these other local taxes. So the payee can be shared by multiple local taxes. Your voucher, in this example, you're going to have a voucher to Regional Income Tax Agency that is 6 different local taxes. So I've seen some pretty large entities that are withholding all the employees' local taxes, and they've got a lot of RETA vendors or RETA local taxes. So the withholding is not named RETA. RETA is not an income tax in itself. The local tax needs to be named for the local tax. Buckeye Village income tax, City of Columbus income tax, and the payee is who you pay the withholding to. I had one entity who had, she must have had 16 school taxes, and she said, on these withholding names, I want to be able to sort the school taxes that are associated with RETA. And of course, remember that, or not school taxes, local taxes is what I mean. She has all these local taxes, and half of them were RETA and the other half were individual websites for the local taxes. And she wanted to be able to associate the local tax reports with RETA. So she doesn't want to keep a list. She wants the name to indicate that. Well, you can't change the name of a withholding in the middle of the year. And you don't want to switch the withholding in the middle of the year, because then you got to edit the W-2 because it'll show on there twice. So at year end, when you open temporary mode, you get that one chance. So she wanted in the withholding name to add RETA. Now it's going to print that way on the people's pay stubs. I think that you can put a list of the local taxes that are RETA, print your local tax reports, sort them so that you've got your stack of RETAs and you've got your stack of individual ones. But she wanted to put RETA in the name of the withholding. Now, it doesn't print on the W-2 that way because you've got the little box that you type the actual name, like Buckeye Village. But I think you could have a list instead of simply putting a name. The RETA name means nothing to the employees who are living in that local tax. Each local tax would have its own withholding name, Buckeye Village, and all of them have RETA. And then you would have to know on the local tax reports which ones report to RETA. State and school tax payments less than $1. So we get this call often in January because someone's trying to make their December tax payment and they only have 27 cents. And the Gateway won't take a payment less than $1. So you can't pay it. It cannot be paid. So when they're faced with that, you do not want to refund it. You have to void the voucher because you did not pay it. Now, reporting is different than paying. You should report on the Gateway the tax, but it won't let you make less than $1 payment. So the voucher has to be voided because there was no payment made. Now, if this happens in the same year, so let's say in March of 2022, I got an employee with a school tax, and he is the only one that has a school tax, and nobody else has school tax, and he had 27 cents withheld. Well, if I try to pay the school tax quarterly, I still don't have over $1. It's 27 cents a month. So I can go online and report the school tax withheld. It won't let me pay. So if I do all those reports, and I want someone to correct me if they've come across this. So if I report the 27 cents for March, but it won't let me pay the first quarter 27 cents, and then I do April 27 cents, May 27 cents, and June 27 cents, and I go online and I try to pay for the quarter, and I now have the first quarter and the next 3 quarters, and it equals over $1. Will the Gateway let me make one payment? Does anybody know the answer to that? Has anybody run across the I can't make a payment because it's less than $1?
I did.
Oh, yes, I have.
Yep.
I
So
did when I was trying to help someone. It
Yep.
was a hot mess.
yes. So they kind of leave them hanging. So as long as they're reporting the tax and it won't let them pay them, I think they're okay. And I can't remember if they tried to take that March reported tax along with the second quarter tax, if it would create one payment over $1 that would hit your bank statement, or whether it would still try to process a 57 cent plus the second quarter. So I'm thinking you could combine that, but you still have to report it by month, or when you do your annual reconciliation of taxes, it's going to be a problem. Does everybody agree with that?
Yeah, I think that's what we ended up doing.
So
We did it with the next payment. I don't know. I never heard back from her, so I'm assuming it worked out.
it worked
okay.
out. Yeah, so they can't leave. I would void the voucher because they're going to forget about it. If they've got that 27 cent voucher, but no online payment was made, they're just going to leave it outstanding for years. But if they void it, then it still shows up as an outstanding, and they combine it with the next time they pay. So what you want to do is when it lets you pay the prior with the current, so it still has to be reported in the month where it was withheld, but then paid all together. Now, we get people that want it in January to combine that 27 cents with their January tax payment for January. You can't do that because now you've called it January tax. But if they had put it on there as 27 cents in March and January's tax, the gateway probably would have let them pay it. Not sure. So, oops, I didn't do that. So, you have an unpaid school tax for March 21 for 27 cents, can't be paid. All school taxes have been paid, and they've got this voucher that's outstanding. Void the voucher and do not refund the 27 cents to the employee because the employee got credit for the 27 cents being withheld. Their W-2 shows it was withheld. They got credit for it. That 27 cents will not be accepted by the gateway. So when they say it's less than $1, we don't want your payment, it's done. After you've done your whole reconciliation of taxes and you can't make any more payments, that can't be paid. You just keep the 27 cents and don't give it back to the employee because now you get a wage adjustment withholding refund for 27 cents and they'll never cash it. So if you feel bad about it, remember he got credit for the 27 cent school tax paid on his W-2. It's just the gateway won't take it. So you're not stealing, it simply won't take the payment. So they should always try to combine it with the next month or quarter, and anytime it just won't let it pay, that's what it's got to go. So the employee had it withheld, you tried to pay, it won't take it, let it go. Any other discussion on that one? Okay, I got an hour to get through a whole lot more information. Let's keep going. Okay, I had one of you VCs, I cannot remember who it was, called in and said, I'm at another entity and I cannot remember why this is doing that. On reports, this is a payment report. Why is the purpose field blank? And it's the same thing with purchase orders. So I think this report is the appropriation ledger. And when you carry over a PO, it automatically fills that in. When you open a PO, it does fill that in. But none of these other things have a purpose in them. And that's because when we rolled over into the new software, which is this software now, the purpose box used to be down here at the bottom in the old software. So it was easy just to type a quick little short message that you wanted to appear in the reports as the purpose. But in the new software, it's on the additional tab and nobody ever goes here. So you go to the additional tab and then type your little phrase here in the purpose box and it will populate that purpose field on the PO reports. And here's the payment. Again, in the old software, the purpose box was down here and now it's on the additional tab. You have to go to the additional tab, type a short purpose. A lot of times what you would type in the purpose box is exactly what you're putting in the detail. So we added a user preference in the new software under user preferences and the purchase orders tab, under this little area, miscellaneous, if the purpose blocks is left blank, automatically fill it in from the description fields in the detail. So a lot of people, when we sent that user notes out, went, oh, I'm going to go do that now. That drives me nuts. And they've checkmarked this. But if you weren't there when they did this, so you've just gone into a new entity and you're thinking, why are their purpose fields blank? It's here that this setting was never checked. And it's the same on the payments. If the purpose field is left blank, fill it in from the description fields. So that's under user preferences in general maintenance. Outstanding adjustments on the bank reconciliation. So in December and January, we always get a lot of calls from people, usually January and February when they're trying to close December, and any outstanding adjustments are force cleared on the December bank rec. So you know that if you post a receipt adjustment, when you go into the bank reconciliation that includes that the first time, you get this pop-up that it says you have outstanding adjustments. Go to the primary payments tab. And they ignore that month after month and a month. So often they've posted those adjustments. They think they need the adjustment and they didn't need the adjustment. And so if they never clear it, they're not going to ever go out of balance. But the problem is on that December 31st bank rec, every one of those adjustments are force cleared, making them go back and evaluate what they did. So think in terms of this. So they didn't post any adjustments to receipts or payments, but in June, they did their audit adjustments. And don't you hate it when audit adjustments don't net to zero? Because these auditors, they'll do a positive general fund 100, negative road and bridge $57. Okay? If you post those audit adjustments, you are now out of balance the difference, unless they have had an adjusting factor all this time. So if their audit adjustments don't net to zero and they were reconciled with the bank before they posted them, but they don't clear them on that first bank rec, in December when they can't close the year, they're going to be following up with that auditor. Your audit adjustments are throwing me out of balance. Well, that auditor has moved on months ago to a different audit. I don't even know if they'll spend time on it. So when the audit adjustments don't net to zero and the customer is already reconciled, really reconciled, the difference is going to throw them out of balance. So you want to tell your clients, anytime you have an adjustment, you get that pop-up, go evaluate it. Because if it's a mistake, it needs to be corrected now, or you're going to be dealing with it in December when you don't have time to go back and deal with these things. So if it shouldn't have been required, that it needs to be reversed. You have to actually reverse it. Just post another adjustments the other directions. And if you originally adjusted a payment down and you're trying to adjust it up, and the blanket certificate or the PO that you originally used is no longer open, you'd have to open another one, then and now, and in order to use it to pull that adjustment back up to where it belongs. Year-end temporary mode. This is funny. So for a couple of years, I could not figure this out. We get a lot of fiscal officers calling in the middle of the year telling them their auditor told them they filed OCBOA and they have to file regulatory. And I'm thinking, why would an auditor be allowed to tell the client what to do? And it's because they're under IPA contract and the contract specifically states regulatory. So the fiscal officer went to all the trouble to do OCBOA, and the auditor tells her, you gotta flip it back to regulatory because the contract is regulatory and we don't want to, we can't do it under the current contract. So what that would mean in the software, the biggest problem you've got is if they filed OCBOA, that means they downloaded the OCBOA notes template, which is not the same for regulatory. So they would have to take the OCBOA notes out of the software under the proper year. So you go to general reports and statements and year-end and AFR notes and documents, and go under 21 or 20, whichever year this is, and delete the OCBOA notes. And they probably had an MD&A under there, so they'd have to determine whether they want to leave the MD&A in. That would be a conversation they have with their auditor. But now they have to download the regulatory notes template and complete them for regulatory. And then on the year-end check, and you put those notes in under AFR notes and documents, and you go to the year-end checklist for 21, and where you choose your type of filing, they're going to switch that to regulatory and then refile. So it's not just a matter of switching the setting. The notes template has to match the annual financial report type. So sometimes they have to redo their notes. Hinkle system confusion. You know, the thing is at UAN, we try to be really careful with the words we use because it causes confusion. Every now and then we're going to make that mistake, but we're really try to be careful when we send out a communication. We don't want to generate 2,000 calls. We want to solve, we give them answers so that we don't need 2,000 calls. So when the Auditor of State's office decided that fiscal officers had to do their own notes, and they did that training all across the state, they called them Hinkle notes. My head could just explode. That has caused so much problem because people don't understand the difference between the notes to the financial statement, which everybody has to do, and the Hinkle system, which is the electronic filing port. So notes to the financial statements at UAN, we don't call them Hinkle notes. We are trying very hard not to further the confusion. Notes to the financial statements are not the Hinkle system. They are just notes. They have nothing to do with Mr. Hinkle, the poor guy. And when you've got everything in your prior year ready and finished, and all you have left to do is notes, as long as you've got temporary mode open, you are good to go. The only thing, you can't get into some of the utilities, and it makes sense as to why, because too many clients went into the new year and closed prior year POs when they should have been in the old year. So now the utility doesn't let you do it. You can't close a prior year PO in the new year while temp mode is still open. So that's trying to solve a problem, not that it's limiting you. So once you close the year, they can be closed. But there are things that can't be done in temp mode. One of those is the January bank reconciliation. And of course, that's because they could go back into December and void that bank rec 20 times. So of course you can't do the January bank rec until the year is closed. And that annoys some people, but it's certainly understandable from an audit perspective. Revenue budgets. We get a lot of calls about revenue budgets. Revenue budgets are always for the whole year. There's no such thing as a temporary revenue budget. It is the whole estimated revenue for the new year, and it's just the estimated revenue. It's not the carryover cash balance plus estimated revenue, because the software already contains the carryover cash balance and carryover encumbrances. The revenue budgets, this is the confusion we get with the clients calling in. I know you guys know this, but those revenue budgets, these are the things that they're confused about, so that you want to be making sure your client understands revenue budget does not include carryover cash. And I'm sure you're doing that. You're probably sitting right beside telling them exactly what to enter. Some counties, I mean, I've tried to emphasize this the last couple years. We get so many calls in January. Nobody knows what to put in for the revenue budgets. And I'm thinking, did you file a tax budget last year? Yes. Did your official certificate come back? I don't know what that is. Okay, find your official certificate. Yes. Did they certify the taxes and other sources for your estimated revenue? Yes. Okay, there's your revenue budgets. So some counties don't let them change that number. Other counties allow them to tweak it as long as they put a cover letter in there to say, hey, we raised the sewer rates, therefore I increased the sewer estimated revenue. So for example, the ARPA fund, lots of people have filed their budgets and then applied for the ARPA fund. So when you get around, the official certificate doesn't contain the ARPA fund. So you get around to January, you've closed the year, you're certifying your fund balances. Of course you can certify the fund balance, but does your county let you put in the estimated revenue for ARPA when it wasn't certified on the official certificate? Some of them say no, that you can only use revenue budgets exactly what was on the official certificate, and then once we issue your first amended certificate, you have to request a new one for that extra. So know what your county that your client's working in. A lot of these counties have very different procedures. Year-end balance certificate. I had a client on the phone just a couple weeks ago. the fiscal officer came over and helped her, and they did the year-end balance certificate in 2021 and sent it off to the county auditor as if it was certifying 2022. So I'm on the phone with her. She's trying to figure out why her resources available for appropriation in UAN have none of the numbers are even close to her amended certificate, and finally walked through and found she had done the wrong year. So you have to be in the new year, or you're going to get last year's figures, and it's not going to work. So this happens all the time. You've got to be in the new year, and it can be added while you're in temporary mode, but on the best practices, it's down after you close the year, because I would say a very high percentage of our clients don't pay attention to the things that have to be done before you create this document in the new year. So number one, you got to have your revenue budgets in the new year because they automatically pull in. You have to have the December 31st bank reconciliation posted, and the reason I'm saying that is because it locks down last year for any other transaction. So it has to be the real final 12/31 bank rec. So if you've got a client that's got a bunch of adjusting factors and they've posted the bank rec and then they voided it and they posted it again and they voided it, wait until you know you've got the last one, because every time a transaction changes on the bank rec in December, your fund balances are changing in the new year. So you have to have that final. And I know you guys, you're going to have your final bank rec done, and it's not going to be a question. And then the only reason you would have to void it is if you had to do something other than change a cash transaction. Sometimes something you want to do says you got to void the bank rec. So you void the bank rec and add it back in, and it's identical. So that didn't change your cash balance, but these clients often are doing things. And all carryover encumbrances have to be the exact carryover balance. So if you're saying you've got your bank rec done and you got your revenue budgets in, but you haven't even looked, all your blanket certificates and purchase orders are still open in the prior year, and you think, oh, I got everything done. You've got a huge carryover encumbrance, and that's not what you want. So you have to get your POs down to exact carryover balances before, because that column is included, of course. This is something we see all the time. Withholdings that are not paid online or by check before 12/31, they post them anyway. And then they're making the online payments in January. And if the online payment has clearly been made in the new year, then they should, in the prior year, void the voucher, let it carry over, and post it where it belongs. So we get all these people, it's like, well, I don't want to carry over. Did you make your payment before December 31st? No, it did carry over then. So you're falsifying your records instead of, I don't want to carry over. Yet you don't really control that if you didn't make the payment. So I could see if you go online on December 31st in the afternoon, you set up a payment for December 31st, but it didn't clear the bank until January 2nd, that is an outstanding payment because you actually set it up for December 31st, but it didn't come out of your bank account until the next. So I'd leave that one outstanding. But they are purposefully posting them in December so that they don't have to carry it over. And the software handles it beautifully, so I don't understand why. Again, it's the want instead of understanding how things should be done. Encourage your clients to prepare ahead of time for this year end. So I was thinking about, well, what if I was still a VC? What would I do? These are the things I'd be telling my clients. Get that year end installed immediately. Open temporary mode immediately. And I think I would be setting an early October or November appointment with my clients to go over and figure out their revenue budgets. And you know you're doing most of this stuff. You're absolutely doing all of the work for them. And you're doing it for 10 to 12 clients. So why not set that appointment in October, go out and figure out their revenue budgets, get their temporary appropriation amounts figured out. Of course, they could be tweaked before then, but at least the core of it would be ready. Figure out what POs they could pull from the duplicate button and have that all set aside, and then they're ready to open temp mode. And they know what the revenue budgets are. They know what they're going to put that in front of their governing board to adopt the temporaries, and they can get their POs and BCs. And then when you show up to do your closing appointment, all you have to actually deal with is closing the year rather than starting with, let's figure out your revenue budgets. So I was thinking, what would I do now different? And I think that would be it. I would be meeting with those clients in October or early November before Thanksgiving, because the time flies past that, and you've got so much to do. Anybody you could get ahead of this would be fabulous. Deferred comp, the Roth and non-Roth, I touched on that. The original Ohio deferred comp says it's not the non-Roth. The BOO process group says it's only for non-Roth. So the new deferred compensation plans are Roth, and they have no pre-tax, so miscellaneous type withholding. And make sure the name says deferred comp Roth and deferred comp non-Roth, so that the withholding name can't be mistaken. I wanted to bring to the front of your mind, when you've got clients that you know that their withholding structure is not named well, like they've got a local tax withholding called RETA, that when you open temporary mode, you get that one chance a year to change a withholding name. And one of the most common problems I see is when they name the insurance withholdings for the company. And you know those contracts change all the time. So their contract this year is with Anthem, but they've already signed a contract starting January, February for Blue Cross Blue Shield. So it's a lot of work to deactivate all the withholdings, add a new withholding to each employee, and set up the skip deduction. So you can see that if I name health insurance, so we've seen people that have all of the insurance, whether it's health, dental, or vision, they just have one withholding called employee insurance. And you can do it that way, as long as you're keeping some kind of record of where you're getting their withholding amounts from. So if you're going to do it as separate items, make sure you're naming them vague enough that if the contract changes, all I have to do is change the payee. So highly recommended that those be changed at year end if you see clients with that. Deferred comp, if they've still got deferred comp, but they have both plans now, or even if they only have the non-Roth, when you open temp mode, have them change deferred comp to have non-Roth in the name, because moving forward, somebody's going to get that. And then the deferred comp, like I put this little asterisk here, somebody's done this. Their old deferred comp is named deferred compensation, and it's a BOO, and the new one, which is a Roth, they named deferred comp with an asterisk. Who's going to know what that means? You know, a year from now, are they going to keep making the mistake? They're getting them backwards. So use that rename option to get some of these cleaned up. So here's how easy it is if your insurance is named by what it is rather than the vendor. So if you got a client that's doing this, let's say we went from Anthem to Blue Cross Blue Shield. So I'm going to add the new vendor payee in accounting and make it available in accounting and payroll withholdings. And this is when the employees have to pay a portion. And then I'm going to wait until the last payment has been made to the old company. Okay? So my withholding payment in the payroll software, if you've still got a payment to make to the old company, you've got to leave it alone. And then, once that payment's been made, you're going to edit the insurance withholding that says health insurance, change the new payee. So I'm going to go from Anthem to Blue Cross Blue Shield. Now, the way I do it is set up the rate as 0, because there's going to be different coverage. Some people have single, married, single with children, married with children, and all those different rates and amounts are different. So I've seen people that have 6 different insurance withholdings, but that is not necessary. If I have one insurance withholding and the rate is 0, and when I add it to the employee, their portion based on their coverage is there. So I think that was an overcomplicated setup. And if somebody goes from single to married, now you've got to deactivate the withholding and add the other. So using just an insurance withholding with the rate 0 lets you attach it to the employee and put in their amount to withhold based on what their coverage is. You don't need separate withholdings for different contributions. And then use the withholding editor to update all the employees at once. So when you are changing the whole withholding, it is a matter of editing every single employee, deactivating the old, adding the new, attaching it, applying the skip calendar, blah, blah, blah. So if you're just got one insurance withholding and you just change the payee, the withholding editor is the best way to keep the skip calendar in place. So I've already got my skip calendar applied, and all I have to do is change the payee and use the withholding editor to update people's rates. So here's the withholding editor. Oops, no, I've edited the withholding first. So I had the Great Insurance Company. So our insurance for Anthem was paid to the Great Insurance Company. And now my Blue Cross Blue Shield is going to go through the best insurance company ever, and I'm leaving the amount 0. And I'll save that. So that's my withholding. All I had to do was change the payee, and it's still attached to employees. So now I need to get the rate right. So I'm in the withholdings editor, payroll maintenance withholdings editor, and this lets you look at all the employees. So you can see Brutus is paid monthly, and he's got coverage. These guys are all paid bi-weekly, and they're all single, every one of them. And so they're paying the least amount. And then these guys are paid monthly, and they're married with children. So you can see that in this whole group, mine just happen to sort in these group amounts. But if yours don't, they're going to be all mixed up. Click on the value at the top, and it'll sort them by amounts so that each amount is together. And then down here in the bottom, I'm going to use the change to and put in the new rate. So I have only selected the 2 with the highest coverage, and I am going to change their rates to the new amount that will be withheld. So whatever our legislation says, I look at the new rate and determine the amount that has to be withheld from that, and I change it to the new. So if I save that, they're going to appear in the list now with the new rate. So if the rate is going up, I highly recommend that you start at the highest one and move up. And if the rate is going down, start with the lowest one and decrease. And I know this because at one point the rate was going down, and I did not start going that direction, and they get all scrambled up, and I'm looking at that going, oh my gosh, what have I done? So I had to very carefully go back. So if it's going up, start at the top. If it's going down, start at the bottom. And that kept it better organized. So I'm going to update Brutus to the new rate, and then I'm going to grab these last ones. So the withholdings editor lets me group them. So the edit by group is going to give me this option where I can select the ones I want and update them. If you're at an entity cleaning up, you may want to look at this withholding editor and verify these employees are withholding the right amount, because I've seen several clients call in and they've taken over from the former fiscal officer, and they're looking at the premium and they can see that Henry Hero has family coverage, but he is only withholding the amount for single coverage. So while when he got married and had children, they updated the insurance company, but they never changed the amount that was withheld. So this is something that you want to check. Anytime you're with a client, you look at the invoice and see what coverage they have and how much they're supposed to withhold. And it's based on here what you're looking at. You'd have to know their frequency of pay and withholdings. So definitely use this. Makes it so much easier when the contract changes and the rates go up and down. All you're doing is changing the payee, updating the rate, and everybody's still good to go. Okay, and the last bit is simply removing old funds, and we've covered that several times. And what I'm thinking about is, darn if I shouldn't have told in the budget webinar, you have this period of time where you can delete an old fund in the fund revenue and appropriation account in the software. It's after you close the prior year, and before you open the budget financial worksheet, because once you open the budget financial worksheet, you have locked down every single account code in your system that's included in that budget financial worksheet. So they've got that sweet period of time. So I've already added to next year's budget webinar, clean up your account codes first, because when you add the budget financial worksheet, you've locked them in for the next 7 months. So until you get around to next year, could you get rid of those? So usually the only thing, once you close the prior year, the only thing that has to be dealt with to remove your funds is your year-end balance certificate. So when you do the year-end balance certificate, funds that you want to delete are in the background of that document, and a lot of people don't realize that. So on in the software, on the year-end balance certificate, there's the one I did in January, and you're looking at that going, wow, no, see, my CARES Act fund isn't there. Look at the unselected list. There it is. So it is in this document in UAN. So I can't remove that fund. I can still remove account codes, but I can't remove the fund. So what they have to do is you have to make sure they have a printed copy of the year-end balance certificate. So if you're there, just make them print it again. Check mark and print so you have a physical copy of what you sent, and then you delete it, and that releases that fund. So that what that says is it can't be in use, and it's in a document. So that year-end balance certificate, nobody really thinks about, oh, now I want to delete all my things before I do my year-end balance certificate, because you're trying to get those things done. But it's very simple. You print the copy for your file so that you can give it to audit, and it doesn't have to be added back in. As a matter of fact, if you have voided a prior year warrant, the numbers would change. If you've not reallocated appropriation, but if you've done any supplemental revenue budgets, it's no longer the same. You can't get back the figures from January once those things have happened. So don't even try. Just print the official copy and go on from there. Oh, I did the screenshot. So still people can't get rid of CARES Act because they have appropriation accounts for CARES Act in the payroll setup still, and they don't even realize it. So listen, we had a lot of people that had COVID sick leave. So they go to the edit employee form, they go to their leaves tab, and there's no COVID sick leave on the active list. But if you look at the inactive list of leaves, you'll see COVID sick leave. They could remove that this year. If it's been inactive all year, it's never been posted on a wage this year, it could be removed, releasing those account codes. Other people have used the salary, Medicare, and retirement in current account codes. So if you've got an hourly earning with multiple account codes, and one of those account codes is CARES Act, still, every time they post a wage, that account code is included. So it can't be removed this year. But you could remove it, edit the employee earning, and delete that account code from the list so that it is no longer locked for next year. So yes, some cleanup can take place, but you got to get it all, every single account code that is in the payroll structure associated with CARES Act has got to be taken out of those. And if they haven't been in a posted wage, then it could be removed. So that cleanup, I think this is what people are missing trying to get rid of CARES Act, is they still have the salary, overtime, leaves, and employer share Medicare, OPERS, and OP&F. So once you get rid of those accounts, you should be able to remove them from the system unless they were included in something posted this year, and then they're going to have to wait till next year. And once all the strings have been unattached, the fund can be removed. So funds cannot be connected to anything to be removed. That is the end. I did get through all of it. Oh my gosh. So I've probably talked so fast you don't even know what I said. So sorry about that, but I didn't think I could get through all that material. So is there anything anybody wants to bring up or talk about? I do want to mention I emailed all of you the VC invoice, because none of you have invoiced us in ages and ages. So those of you out there have been, I emailed you just right before the webinar a copy of the VC invoice, and you want to fill that out and get it back to us. Just send it to the support line. I'm on vacation after today, so don't email it directly to me. Email it to UAN support, and the team will forward those over to the director, and he'll process those payments. Or he'll send them up to be processed. But don't send them in to me because I won't be here.
What do we put under entity, or we just put
UAN? Yeah, UAN. Good question. UAN VC training. Yep.
I know this isn't one of the problem. It is a big problem, but a lot of these printers are not working properly. I don't know if people. I've got 3 villages alone right now that we temporarily got their HP printers working out of one tray. I told them they had to call UAN or HP to get them fixed, but I don't think these new people understand or have good contact to get that with.
Let me show you. Yeah, I'll tell you what. You know, when we went to multifunction printers, what we all failed to realize is you now have a computer connected to a computer. And every time we replace them, they're getting more complicated and they're more efficient. They're very energy efficient. She goes to sleep so quickly. I still swear there was a little woman doing her nails in there because it's just bizarre that, you know, you send something to the printer, you wait more, and then suddenly she's got her nails are dry and she'll send you that. So, you know, I want the old printer. I mean, I don't mean the old Dell. I'm talking about that little white one that only had one tray. That's probably from 20 years ago. And that thing cranked out pages. You had to switch the paper, you know, to legal. But that thing, it was a very simple piece of equipment. And we all know Windows doesn't play nice. And this happens everywhere you go. So at church on Sunday, the guys are trying to get the PowerPoint to work, and there was a Windows update, and so the PowerPoint won't connect to the computer. When I bought a car the last time, the guy at the dealership is complaining because he only has one printer that will print their forms, and every time there's a Windows update, it won't work. So this is everywhere. It's not just UAN. Windows doesn't play nice, and we know it, and the whole world has to take it. So I don't see any hope of Windows playing nice ever. So what I want to say is sometimes it's just a communication issue. So shut the printer off with the switch on the back, restart your computer, and when the computer's restarted, turn on that printer. And a lot of times that does solve the problem. It restarts them talking to each other. It doesn't work every time. Otherwise, we wouldn't have hundreds of calls about printers. But on our website, under hardware and printer, if they've got to call HP, then this is what they want to be looked at. So forget the ordering HP supplies because you can get your toner anywhere you need it, as long as it's real toner. It's right here. Before contacting HP, you need this information. So the printer serial number is on a silver sticker. It's either on the back, which is hard to get to. You can open up the tray 1, which is the manual feed tray, and you'll see the silver sticker on the left side, and it's got the serial number on it. So that's the number they need, and you can get it out of either place. And they ask you who's calling. They don't know you. So the owner of the printer is Ohio Auditor of State Uniform Accounting Network. If they say Buckeye Township, they're done with you. You don't have a warranty. We don't have your printer registered. So you have to say the owner is Ohio Auditor of State. So if you call HP, you get the following voice prompts. And remember, this could change. They could change that prompt today, and the website wouldn't know that. But right now, the voice prompt shortcut is getting you to reply LaserJet. And the voice prompt 2 is the model number. So here's the two model numbers, a single function and a multifunction. And if it's got people's like, well, I don't know which I have. If it's got the tray feed at the top, it's a multifunction printer. If it copies, and the difference when you're looking at them is the feed tray. A single function printer, I don't think, has a feed tray. Is that right?
No, it does not.
Okay. All right. So for the tray setup, we get a lot of people that have not set their trays up correctly. And to get those trays, and if the electric goes off, sometimes it defaults back. So did you see I went right here to HP printer install instructions? And it opened up a new tab. So in the install instructions, assign the trays in the UAN preferred method right there. So this is telling you, and of course, you need to print it and your printer's not working. So how you're going to print it. So if you can pull this up on your screen and see the printer, it's on the printer LED screen that you're going to make these choices. So I think this one was for, this is the multifunction, and the single function is on here as well, right there. So some people are printing checks out of the middle tray, and the manual feed tray is now named number 1, which is beyond crazy to me. And tray 2 is the skinny legal tray, and tray 3 is the letter, which you print letter and checks out of. So if you use this method to set the trays up correctly, it ought to work. One of the things I have found is, because I'm a click happy kind of gal myself, so when I go to post something, oh, let me get some wages in here. Fake wages. Oh yeah, blah blah. No, I don't want to edit them. So I'm posting, so I'm going to select all, and I'm going to click post print. Do I want to post them? Okay. And then it brings up the print form. Well, it doesn't bring up the print form yet. So I'm going to print these for this. And okay. This is the print form. So right now what I'm doing is turning around and putting checks in my tray. Now the software is going to show you load these checks. Okay? So you turn around, you load the checks in the tray, you shut the drawer, and you turn around and you click print immediately. Don't, because the printer, when you shut that drawer, her nails are wet. She is so freaking busy, guys. She has no time to look at what you want her to do. Think of her as her nails are wet, and she's going to blow on them a bit, because the printer has to tell the computer that the tray is shut and ready to use, and it takes time. Count to 10 slowly, because some people are turning around and clicking print immediately, and 2 checks go to the legal tray and the rest of them drop down to the letter tray, and they're all printing on the wrong checks. It's because they're not giving the printer that 10 count to tell the computer the tray's ready. I don't even think the printer has told the printer the tray is ready. Her nails are wet. I mean, I got it. It's the only thing I can think of. It's because I had a sister that was doing that all the time. Oh, my nails are wet, kind of thing. So they have to pause. So put the tray, close the drawer of the tray, turn around, count to 10, and click print. And it should go to the right tray. So I think the fast clickers are doing that because the printer hasn't accepted that the drawer's ready yet. Now that's one problem. The other 99 are Windows communication issues. So yeah, I'd be screaming if I was a client and I couldn't, it works 5 minutes ago. I printed a report, it worked. Now I'm posting wages and none of them will print. I need to get out of here and get to blah, blah, blah. And I would be furious as well. However, none of the other printers that we looked at would have been any different. Windows doesn't play nice, and printers are little computers now. So you have to give them time to communicate. You have to have the tray set up correctly. Stand on one foot with foil on your head. I'm not a technician. I can't explain why these things won't stay connected, but they don't. So, um, our technicians can usually uninstall and reinstall the driver if Windows quits accepting that printer driver. It shouldn't take too long, but it does take time out of people's days. And I wish we could solve it, but it doesn't seem to be, it seems to be everywhere. People are dealing with the Windows and printer issue. So I will pass along the issue. But your clients, if you tell them call UAN, some of them are day jobs and they can't be at the UAN computer when the techs are there. Call HP and give them that information. So it's right on our website under hardware and printer, everything you need to call HP. And I know Tony and I at one time talked about building a trebuchet to fling the old Dell printer across an open field. It's like I had plans. I had actual plans where it could be built and we could have done it. But then we got the HP printers and it's the same thing. So it really wasn't Dell. It's the fact that printers are little computers and Windows doesn't like to communicate well. So we have to go back to those very, very old printers, which Windows probably wouldn't recognize. Does anybody have anything else?
I have a question about invoicing.
Yeah.
Is our only option to mail those in and those be emailed to you?
No, you can save it and just attach the Excel spreadsheet to an email to UAN. You don't have to print it and mail it. So just fill it out and save it, and then attach it to an email and just make sure you're putting your name, attaching an invoice for the VC training, and our support team, I'm going to make sure they understand that those get forwarded to Tim immediately, and he'll process them through the finance office, and you'll get your direct deposit. No, you won't know your PO number, so
Right.
Tim knows the PO number.
All right.
Yeah, Wanda says when I print checks, it prints one, waits a few seconds before printing the next one. You know, the programmers look at me when I say this, and they say, "Is it 3 to 5 seconds?" Yes. That's not a big deal, Trina. Take a sip of coffee. And I'm thinking, yeah, I'd be strangling y'all right now because it's
Some of them are printing 200 some checks. So.
yeah, and you can't. For heaven's sakes, don't select 45 checks and send them to the printer. Nobody should be doing that anymore. Highly recommend. I mean, this happened to me once. I mean, back when I was, before I came to UAN, is I selected 40 checks for the meeting and sent them to the printer at once. And of course, that's when the printer jammed and they all went on the wrong check number and sideways and everything else. And then I had to reissue all 40. And I thought, well, I'm never going to do that again. I printed them in groups of 10. I don't know that I would even do 10 right now. I really honestly don't know that I would post 10 checks at a time. I know one client that says they post them one at a time, but a 3 to 5 second delay between checks is normal. And it would make me absolutely crazy. But the 3 to 5 second delay between any batch item. So if you print a batch of receipts, you'll see a 3 to 5 second delay between each one. And it is because we need the printer to recognize each check as an individual item. Otherwise, it prints them out of order on the wrong check numbers. So it has to be sent as if it's individual items, and that causes that 3 to 5 second delay. Now, if you've got a 2 minutes or longer between batch items, they can fix it. They can absolutely fix that. But when we tell them the 3 to 5 second delay, they just shake their head. It's like, what's wrong with you? That's a 3 to 5 second delay. Of my day several times. So
I had some really bad experiences with my printer and dealt with HP a couple of times and ended up with many messed up checks and problems. And finally, I broke down and called HP a third time and got a tech guy who gave me a driver that works. And I'm knocking on wood, but my printer works perfectly now.
Excellent.
Quickly and perfectly. So you might try one more time to get, a drive. There are so many different drivers. I think that somehow he was able to get me the right one.
Well, the driver that our techs use, you can't just download a driver. Oh, you can't undo that. So I'm going to send that to the printer. The drivers that we're using under hardware and printer, these are the drivers that we know work with UAN. But if you just went to the HP website, not you, but we've got a lot of clients I know how to install a printer, and they just went to the HP website and downloaded a driver. It's not going to work right. So this is why we have the drivers that we've tested that should work. But again, even using these drivers that we've tested and work, sometimes they don't function right, and our techs have to uninstall and reinstall. It would be interesting to know, if you ever get a technician on the phone for something else, ask him to look at your driver, your printer driver, and see if it's the one that UAN's using. Don't let him touch it if it's working, but tell him you had a lot of trouble, and HP finally downloaded that driver, and it has worked perfectly since. Because and I know they do check these things from time to time, that if another driver has come out that's more efficient, we want to switch to it. So if you get a tech on the phone, they want to know the specific. Let them know you've got a driver that solved the problems. There's 4 minutes left. 4 minutes. Oh, I wanted to just tell you what I went through with the call this morning. And I said if I'd have done this yesterday, I would have added it to the slides. So we got a call this morning from a fiscal officer. The employee died, and they owed him 8 hours of wages. So he had worked 8 hours before he died. So they owe him the 8-hour paycheck, and he has leave payouts. And anytime somebody dies and you owe him money after the date of death, you got to go to the IRS publication for payments to a deceased employee. They have their own little publication on that. And it takes you through. A couple of years ago, I had a fiscal officer call in. The guy worked in December and died before the last day of December, but the paycheck wasn't going to be posted till January. So when they're getting paid, even that was normally paid in January. So when it crosses years, the IRS says you're going to handle it completely different. So I finally found a use for these two items. The non-tax item, which everybody thinks that they can reimburse somebody for what they bought at Lowe's there. No. And the non-tax, non-retirement item. So these have been in payroll since the beginning, but I have never seen anybody using them properly. So when you read the IRS publication about how a deceased final wages and leave payouts have to be posted, the non-tax item would be used for paying the final hours, because it'll let you pay the state retirement. That 8 hours was pensionable for this guy, but only Medicare comes out. It is not taxable for federal, state, school taxes. And so you can't just edit them out of a regular wage. You have to use the non-tax item to pay the pensionable final hours, and then the leave payouts are not pensionable and non-taxable. So Medicare comes out, but none of the other taxes. He didn't have a local tax, or it would have had to come out as well. So the W-2 has to reflect that it's only taxable for Medicare. And I had never seen in all my years with UAN a purpose for these. And it's if somebody dies and you owe them a paycheck. La, I knew it wouldn't be in there for nothing. I just had never found a reason for it. So if you've got a client who's one of their employees or trustees dies and they owe them money, you've got to go to the IRS publication for deceased employee wages, and it's very specific. So it has to be taxed specially like that, and you have to do a 1099 miscellaneous as well when it's paid in the current year of their death. So she had to add him as a vendor payee, the estate of, and then mark him 1099. And then at the end of the year, she'll do a 1099 miscellaneous manually because nothing's paid from accounting, but it's required. You have to have both. So that was fascinating.
Yes, that was some very good information there, Trina. Thank you so much for doing this today. This has been a wonderful presentation.
Thanks. Thanks. So I'm going to record it. Well, the whole thing is recorded, and we'll put the link where only the VCs can get it. So I'll email the link. So if anybody, would you all like to have the link in case there's a section you want to rewatch? I can just send the link once it's the video is placed. It won't be on our website. It will be. I'm going to send the link so you can get it on YouTube by clicking the link. So I think I'll just go ahead and send all of you the link to the video, and you can watch any extra part that you want. Of course, you can always call as well, but I won't be here. I'm leaving tonight and won't be back until I'm off through next Friday, back the Monday after. So after that, if you have questions, you can call back in. But thank you guys so much for all the hard work you do across the state. We hear a lot of good things about my visiting clerk came and cleaned all this up, and man, they were easy to work with, and they're loving the fact that you connect remotely. So I'm glad you guys are making use of that. If anybody wants the splash top and doesn't have it, you want to call in, and we will get you set up with Splash Top and then run you through a little training with it. All right, so I'm not going to waste any more of your time. I'll go ahead and shut down the webinar. Thank you, guys.